Hi everybody, Howard Friend here. Hope everybody is doing well, enjoying these market swings. Some very interesting movements in the markets, particularly on the currency side, where I'm kind of specialized. Let's kick this thing off. So basically, what I'm looking at is a low on the pound against the dollar and against the euro against the dollar. I've been waiting for that for a few days now, and I think finally we have the setup in place. So let me just show you my screen. Okay, so what we should be looking at is a daily chart of euro dollar. That should be coming through fairly shortly. Okay, so what I've been looking at for the past few days is really looking for this thing to base out, not a million miles below 108. And today we saw a kind of a push lower and some support coming in the low 107s. The pullback that I've got from 109.54 is a correction within this bullish trend. So Elliott wise, we've had a 1, 2 and then an extended third wave, which I think we're in at the moment. 1, 2, 3, and I think what we're doing now is we're kind of basing at the end of wave 4 within that sequence. So I'm looking for the buyers to step back in and to resume this major uptrend, which really kind of kicked off in early February. So looking for the thing, I think if we can break above yesterday's high, which comes in just a little bit above 108, the figure 108.023, then that would form a kind of a bullish outside day, and then away we go. It will look to me like the low is in place. Cable sterling dollar, similar kind of idea there, where we have a nice kind of clearly defined uptrend, stalled a little bit above 130, and we've since seen a bit of a corrective pullback. Now I've been waiting for this corrective pullback to base out really between these two pink lines. So we're talking about 128.612 and 129.109. So 129, give or take, sort of a few pips up and down. We had the first pullback, which found some support in the region, and then a bit of a bounce, which topped out 129.74 a couple of days ago, and then we saw a kind of a second leg lower yesterday, and it looked pretty horrible as at yesterday's close, but the buyers stepped in today, and we've since taken out yesterday's high. A bit of a rejection from these kind of resistance levels above 129.60 today so far, but overall I think we've probably seen the end of this corrective pullback. So as with euro dollar, looking for upside break of these resistance levels to really kind of signal a resumption of this this major uptrend, which began way back in January in this case. So resistance wise, we've got this high that comes in 129.741. Today's high fell short just a little bit below it. Kind of it snapped back from there on the earlier bullish probe, but we haven't done a whole lot of damage to today's rally so far. So the buyers still seem to be in control on cable. So again, looking for the market really to break through this 129.741 resistance level, and then we should be off to the races, back up to at least retest the swing high 130.147 or thereabouts. So that's kind of where I'm at on the dollar majors. Hey, Richard.
How's it going, Howard? Sorry, I was having issues logging in.
No worries, all good, all good. Yeah, I'm just talking people through some of these currency pairs. That's cable sterling dollar. Moving on to dollar yen. This one has acted a little bit differently to cable and euro dollar. Hi, Walter.
Hey, Walter.
Hey guys, how are you? I think
Well,
Richard and I were experiencing issues trying to get on this on the link.
no
Yeah,
worries,
it's
no worries.
been difficult for the past few days.
Yeah, no,
It's all
But
good.
no
anyway,
problem.
sorry
Yeah,
for interrupting, Howard.
not at all, not at all. Yeah, just so we just looked at euro dollar and cable. Just looking at dollar yen, it's been quite strong. This rebound from 146.54. I'm expecting the thing to really top out in this resistance window, which is 150.929 and the corrective high 151.303. So we kind of a couple of days ago had a look at it, saw a bearish reversal, and now today we're having another crack at that region. So far, not really breaking through big style on the way up. So it'd be interesting to see whether we can kind of stall in this region and then start to sort of see a bearish turn. So that's dollar yen. Overall, I see the bounce as a correction of the swing from 158.879 down to 146.542. So a corrective rebound, a correction of that that first move down. The reason I'm really bearish on the structure wise is that for me, the rebound before it broke down into a clear ABC pattern, which are three corrective, a three-wave move, which invariably they are corrective patterns which get completely reversed in time. So and that comes after the initial leg down from 161.95. So a kind of a first leg down, a kind of a second leg up, or rather a correction, probably a second wave or a B wave, and then we started to break down in the early stages of this this bear market. So still looking for the turn. I think should we break through yesterday's low, that might be the trigger. We had that kind of inside day. So we're looking at 149.841 as probably a trigger for a multi-day short trade going for to look at new lows. So that's dollar yen. I'll kind of pause there for a second. I can always come back to the other pairs a bit later on if one of you guys want to jump in.
Walter, you want to go for it?
Yeah, yeah, of course I can go for it. I know that the Monday session, unfortunately, I couldn't plug in because there was there's been a really bad storm here for the past few days, which fortunately has now gone past, so that's all good. So yeah,
damage?
so sorry.
Any damage?
Yeah, so glass fence got shattered.
Oh no!
I didn't know I didn't know the glass fence was capable of being destroyed by wind, but the wind was so strong it shattered the fence. So I've learned a lesson there. Glass fences are not always they might look good, they might look good, but practically they may not be the best option.
Gotcha. Good. Well, happy
All
you're
right.
safe.
Thank you. I've just shared my screen now, by the way. There we go. All right, we're live. So now I'm just going to talk about gold because it's been an interesting few days actually, and it's been a tough start of the week for sure. I've definitely because price was sort of moving. So this was the bigger range that was created on Friday's price action, and pretty much Monday, Tuesday, Wednesday, we've just sort of been trading inside of this range. So there hasn't been sort of any sustained move. I remember I took a trade on Monday, and it was a short. I scratched that break even on that trade because price came I was anticipating price to take out this low on Friday, but it just came all the way back up and swiped up the high of Monday. And then Tuesday was the same. I took a short trade, which initially was playing off well, and then I got taken out towards the start of London when the market swiped back. So it was a very choppy market. But I've been patient with this because again, it's very typical for gold to do something like this. So today I actually had a finally a nice trade that ran really well and played off really well. So I'm just going to just clean up my chart a bit because I also want to focus on sort of what I'm anticipating in New York. So prices finally broke up. So there were two different ranges at play. There was obviously the macro range. So this is the 30 minutes range, 1 hour range.
Mm-hmm.
And then there was a smaller range that was also within this range right there. And so within this range, it tries to behave within ranges where it will take out sell side liquidity and then run to buy side and then run back down to sell side. And then which led me to today's setup where, by the way, are you guys, can you guys hear me clearly?
Say again? So you're losing you a little bit there.
Are we all good?
Sounds like a bit of interference though.
Sorry, say that again.
Yeah, that's better. We just lost you there a little bit. Walter,
Yeah.
can you hear us?
Perfect. So, okay. Yeah, I can hear you guys clearly. Can you hear me?
Okay.
Yep.
Yeah.
Oh, good.
Awesome. So now leading on to today, because price is broken outside of the smaller range, and now we're actually in place, and now price is actually doing something. So it's gone for the high of the larger range that has sort of been there since. So the high of the low was defined on Friday's price action, and then today, yeah, so the opportunity for me was a long opportunity for two reasons. The first is because the most recent purge of liquidity on the price to run towards some form of buy side liquidity pool. And then the second reason was because it was in line with the trend cycle. Okay, so I know that I mentioned about the trend cycle quite a lot, but the predominant trend cycle in this case was bullish, with obviously this low being the initial low, the market giving that first point of expansion, and then of course there was that second point of expansion, and I was anticipating the market to essentially take out this high at some point this week, right? So today I essentially I saw a break above a key area of liquidity. Price created an imbalance. So my first opportunity was to go long. So I went long at the order block. So I had the imbalance within the order block, and then stop went below the low. And because price was pretty much trading and moving within a constrained range, my initial target wasn't ambitious. I simply just went for that initial high. So that was my primary objective. So it was a small trade. Coming into London session, I saw another opportunity to go long. The reason being is because the market had finally given that third expansive leg of the cycle right there, right? So the market had given that final third expansive leg of the cycle. And so what I was anticipating from there was for the market to retest a bullish order block before the bullish continuation to the upside. And the bullish order block that I identified at the time was this order block that was created during the Asian session. So we can see the market contracted right into that order block, giving us that second bullish opportunity to go long from the order block, stop below the low, right? And again, the target, I didn't see price trading all the way back up to, so I didn't see price trading all the way back up to the most recent highest high on gold. Honestly, I didn't see that happening today. I did see the market sort of like breaking above key levels, but most certainly not giving the move that it gave. So I simply just aimed for, again, I just aimed for a 1 to 2 on this trade. It's a very conservative trade to the high of the range. And the market came down, retested that block, and then rallied. So now going into New York, now the price is actually broken out of this major high. I'm not actually expecting any major movements to happen in the New York session. The reason being is because a lot of the liquidity came into the market during the Asia and the London session. So what we could see in the New York session is a relatively quieter price action where the market may just hold its level up until tomorrow's trading session. But if there is going to be an opportunity, so this is the kind of opportunity that I think would make sense. So I'm still going to be long, most like 100% long is still the most optimal opportunity. So I'm just going to just quickly show you guys the setup that I'm looking for within the context of what's happened so far. So I'm just updating these levels, right? So this is the market retesting this order block. and then given a new trend cycle, the first expansion, secondary expansion. And now my new area of interest has moved from this bullish order block to the new and most recent bullish order block that was created, which is down here. Or you could go for something a bit smaller like this one, right? And I like this. This is a very nice confluence as well, because this was an area of resistance. Now that price has broken the area of resistance, this could now form a new area of support for price. Nice. So there's a very nice confluent price action in this range. There's an order block, there's a support, there's a resistance. This has now become support. And within this order block, there's also a very nice little imbalance right there. So all of these together for me gives a very strong confirmation, a very strong entry confirmation within that range. So for us to go long, the long opportunity, I'll anticipate price to just come down just a little bit further to tap right at the edge of the order block. Stop loss going below the swing low right there. And then again, I will be conservative and I'll just go for the most recent high, slightly just above. The reason being is because, again, if we go to the 4 hour, we can see that price has created a relative equal high with the highest point that gold had reached this year. So, and that's like $3,057. So we can aim for price to potentially, it could break that level. It could break that level. But again, with gold, one thing I've learned is don't, like, when you most expect price to break a level is when it's least likely going to do it. So
Walter, we're losing you there.
That's why I just prefer to be conservative.
There we go.
So yeah, so this is a trade setup for gold. Pen in order, placing my pen in order at 3,038. Stop loss going below at 3,032, and then my profit target goes to the highest point that gold had reached at 3,057 for a potential R to R of 1 to 3. So yeah, so that's it for me on this. I'm not sure if Howard or Richard, you had anything that you wanted to add on to this.
Yeah, I think that's a very nice looking setup there. Seems like it's really close. So you're going to be taking a trade there if it hits it.
Yeah, so I'm going to be placing a pen in order there right now.
Right.
So pen in order is going to be at exactly 3,038.23.
Cool. All right. Yeah, let's hope it reaches that, and then we can have a look at that if it does hit. I'm just going to quickly show you my chart if that's all right, guys.
Yeah.
Oh yes, of course, go for it. And then I will share my gold take after you. You're done with yours, Richard. There's something set it up on that as well. There we go.
All right, that's the NASDAQ. Are we looking at the S&P? Did it actually? Yes, showing. Cool. Oh, we had a question yesterday from one of our viewers when price is actually going to fill this gap that occurred here on, it was the 21st of this month, when price was way up here. And we said, well, if we see a strong decline, that's probably a possibility. So this little zone I've got here on about 5692 to the low side, 5666, devil's number. Seems like price is currently filling that gap. Now, whether it's going to find support after doing so, no idea. As you guys probably know, and to the viewers, that I do like trading setups or reversals that typically occur on the S&P 500 or on the NASDAQ. We're looking at the S&P 500 today only. We'll look at crude oil just afterwards. But I do like trading between the 9 a.m. to 11 a.m. time window. If I'm not mistaken, we've New York session already started 4 minutes ago, so a little bit more volume coming in. We've had a pretty significant, well, not significant, but a decently strong move yesterday, again, within that time zone that I like trading. Nice strong drop to the downside. Almost reached that gap, and now it looks like we're filling it. So for a trade setup, I would like to see what happens if price can actually fill this gap properly, and then see if we can get some sort of a reversal to the upside, if that obviously occurs, right? I'll be then switching to a smaller time frame, like the 1 minute time frame. I like to see a previous price structure break, and then also fair value gaps that will determine my trade entry location. So not too far off, actually, of those that low of that gap. We got the same thing here on the NASDAQ. It's actually, the price is very close to filling that gap, actually. That gap actually being a little bit wider. Plus minus here, guys. So same thing. NASDAQ obviously also moving lower. So yeah, unless price finds support here, moves up and takes out these overnight session highs and then reverse lower, I can't really see that happening. I think we're first going to see price reach the bottom of that gap, and then I'll be interested in potentially going long. Unless prices continue declining and we just have a downwards day with no proper reversal, then that's also a possibility. But yeah, that's what I'm looking at on the ES. And then here on the crude oil, very strong move downwards all of a sudden. We've had that occur right in that time window of mine again. I was also looking here at a gap that actually formed yesterday. It was around about 1655, 1800. It looks like that little 1 hour what's its name? Futures close, or that you typically get. So yeah, we've just reached the overnight session lows around 69.06. Looks like we are getting a little bit of a bounce to the upside again. I want to see price breach these levels and give me a reversal, at which stage, this is actually a good example, I'll switch to the 1 minute time frame and then see if I can visually spot a clear price structure point. All right, and at the moment you just see one straight drop to the downside. The most clearer price structure points way up here at 69.45-ish. So that's too far up for me. If we get something like this, for example, and then price jumps higher, breaking a structure point, then I'll be interested in taking a long on crude oil. Right, that's really it. Quite a few things still need to happen. I'm really interested in seeing what happens if price actually takes out or fills this gap on both the ES and the NASDAQ. But it surely looks like a very strong move lower at the moment. We also had, I have this off screen at the moment. Can you guys see that? Yeah. Final GDP and unemployment claims that came out just over an hour ago. So that's the GDP numbers quarter on quarter, slightly better, and unemployment claims also very slightly better. So at the moment, market's moving lower. So I can't really say that's the reason. I think there's also a lot of issues with the tariffs that Trump has imposed. Now, the market's potentially not liking that. In the bigger picture, which I'll probably show you guys a little bit later if we still have some time towards the end of the session, we'll look at the bit of the bigger picture, maybe look at a daily or a weekly time frame. At the ES or the NASDAQ, I'll pull up a chart on the side here while you guys are showing yours and just discuss what potentially is happening and whether we're potentially heading towards new lows. Whether that massive decline we've seen is going to continue, or do we still have some upside potential? A little bit of a playing around on the technical analysis side of things with my view or take on it. So again, I'll watch the price action on my side here. And I think, yeah, over to you, Howard or Walter. Did you get into that trade yet?
Yes, so price has triggered the gold position now. So it's,
Okay.
yeah, so I'm not in the trade, now active trade now.
Cool.
It was a very strong drop into the order block. I thought, am I going to get stopped out? But I haven't been stopped out.
Okay.
I was still
declining. Maybe you want to show us, that's fine. Or Howard, you can show yours.
Yeah, of course, I'm happy to share. I'm not sure if Howard had any updates from what he mentioned earlier.
Okay.
Howard, did you have any updates, or are you happy with me to share my screen? Howard, can you hear us?
We just lost Howard. He's coming back now.
Hello, Howard.
There he is. Howard?
Sorry, so I'm getting connection issues there. Can you hear me?
Yeah, that's better. I can hear you loud and clear.
Okay, yeah, I'm just loading up. Perfect. Yeah, so what I was talking about before really initially was looking for the dollar to start headed lower. I think today made its high for the corrective move. Let me show you on a weekly. Just 1 second. Let me just share. Second, share screen. Okay, let me know when you can see the screen. It should come through fairly soon. Okay. Yeah, so what we've got here is euro dollar weekly. I know it's quite a longer-ish term time frame, but sometimes this can be quite instructive for some of the multi-day stuff that I look at. What we're seeing this week, although it's not yet complete, but we're seeing a long lower shadow on the weekly candle, which is forming, and it's forming after firstly a big kind of thrust higher, and then a couple of correct it. Okay, so it looks to me to be kind of like the last leg of the correction, and it is in a similar vein to these kind of moves here. So thrust higher, multi-bar in this case, then a couple of small ranges, then long lower shadow, then up we go to new highs. Another one there, big thrust higher, small candles there, weekly candles, and a little bit of some sort of long lower shadows, and then up we go. And another one here, massive up candle, small, long lower shadow, and up we go. So that kind of thing fits in a little bit with what I'm talking about in terms of the bigger picture, which for me is we're seeing the end of a corrective pullback.
Yeah.
Does that make sense, guys?
Yeah.
Okay. So just looking closer into today. So today actually is the first day that we've really kind of done anything serious in terms of damage to a previous strong day, down day. We're seeing quite a big retracement of nearly a complete retracement of yesterday's down session, which really is holding. So if I was short, I wouldn't be too happy at this late stage of the cycle. It could well be early stages of the next leg up. I think today marks yesterday marked completion of the correction, and that we start to head higher. And as I say, once we break through, should we break through yesterday's high 108.027, then there could be a lot of stops above that high. And then we could start to see a bit of an acceleration. Now, I don't know whether there's anything later on today that will trigger it, whether it happens in Asia or it starts to happen tomorrow. But for me, it looks like the balance of power has kind of swung back in favor of the buyers now for that one. I was going to look at I think Aussie and Kiwi as well. So Aussie has been doing a slightly different thing, but I think overall the structure is kind of the same, in that we started a major bull market. We've seen a first leg higher from a major swing low back in February, and effectively a sideways pattern since then. The last pullback found support at this higher low, so there's definitely some big support coming in around this level. Admittedly, the bounce from that point has not been particularly aggressive yet, but should we break through yesterday's high, then that for me would start to signal acceleration for Aussie US. And it's interesting. I love these kind of candles where you get a kind of a long upper shadow and a bearish close, and everybody jumps in at the end of the day, says it's bearish, and starts selling into it. And then once we break through the high of it, then we a bit like this one here, where it breaks down, slams higher, it's really bullish, and then in come the real sellers, and down you go for a couple of days. That kind of pattern, this one here, breaks up, slams down, looks bearish, and then the next day here, away we go. Same one here, breaks down, closes strong, next day, boom. So that kind of fake out can buying strength when you see this kind of reversal candle after a little attempt at the upside can be a good for me, a good strategy. So I'd be looking to buy once we can get above yesterday's high. That might be a good break to buy for Aussie US for a multi-day swing, or even maybe a day trade. It could be one of those things where it breaks up and stalls and then comes back down again. But a good trigger level, I think yesterday's high could be for buying the Aussie. Kiwi tends to do the same kind of thing as the Aussie. Kiwi dollar, that is, and it has been doing a similar kind of pattern to the Aussie, where we've had a kind of a first leg higher, although it's been a little bit stronger. It's made a bigger high than the Aussie, to be fair. It looks a bit more like a nice uptrend starting, so swing correction, and base out and swing higher again. Again, a similar thing on yesterday's candle where it slammed, it went higher and then closed weak. So again, you've got people kind of thinking this is quite bearish, and today we're starting to move higher. So again, should we break yesterday's high? Again, could be a trigger for just like this was. So breaks up, closes weak, next day in come the buyers, boom. It could be one of those setups, and that would certainly fit in with the structure of a developing upward trend for me. Anything you see on these charts, guys?
What's that? The Kiwi?
Yeah, Kiwi dollar.
It looks there from that low. Was it 0.55153?
Yeah, well, 163.
Looks like the top of a leading diagonal, 5 waves kick off that move.
Yeah, agree.
Which is typically a strong signal of a reversal. But yeah.
Quite a sharp correction of it. Quite a deep second wave.
Yeah, quite deep. But unless that's an expanding flat somehow, I'm not sure.
Yeah, I'm a bit confused as to whether this is one irregular two or this is one irregular two with a running second wave.
Yeah.
So B wave to new highs and then a kind of a second wave that stalls here. But either way, I think it's really, really bullish. So just looking for an excuse to buy it on. Yeah, looking for an excuse to buy it on strength really.
I know, but from what it looks like right now, although it could be bullish, it's sitting in a tight range, and I do see price taking out the lows. Ideally, that most recent swing low that was created, or the lower low preceding that low, that low, before any kind of like that low. I do see price head into that low before. No, the one that the prior one. Yeah, that one. Yeah. Before any sort of bullish continuation to the upside.
Yeah.
Because it's currently taken out buy side. It's tapped into some sort of buy side pull on that previous daily candle, on yesterday's candle. So we'll see how this candle closes, but it's likely we could see a further push to the downside.
Okay. Yeah. No, it's I think if it doesn't do too much to the upside today and tomorrow, then we could see a as you say, a kind of test of this lower end. It does seem to be quite an important level here. It was quite it found support here. Found support here. It could be an interesting kind of maybe a climactic push lower than it bases, but I'm ready to buy it on strength, to be fair. So either way, I'm looking for an excuse to buy it, basically.
Gotcha.
So that's Kiwi. Let's see. I was talking to the other guys about the stock market, S&P and NASDAQ, which obviously it's not really my specialization, but interesting to see how the rally stalled at the double top breakout level on the S&P. So we had
that's
the
interesting, actually.
double top, breaks down, retests it, and then the big selling obviously on the news, but this is the place from which it seemed to want to break down. So that's interesting in itself. There's a lot of overhead supply above this level. So whether that's a kind of a bear market rally and we break down, or whether it's just a kind of it temporarily stalls before it makes a higher low, then goes again. I guess we'll have to see how it goes the next few days, really.
Yeah, that's for sure.
Yeah, it's beautifully retested that sort of prior support, and it's given a nice evening star formation to the downside as well. So yeah, it'll be interesting to see, because I mean the next major draw on any sort of sell side pull is that sharp swing low just right below where price is. So yeah, so if there's very little resistance where price currently is, we'll probably see a very smooth run towards that level.
Yeah, it kind of gapped up, didn't it? The before that run up to the high, it was quite a strong
very strong move to the upside.
Yeah. So yeah, that'll be interesting. It might be something to attack from the short side if you get any decent signals there.
Yeah,
and I think the NASDAQ
move.
Oh, yeah, it does. When it goes, doesn't it? And then the NASDAQ as well. Although there's the NASDAQ. NASDAQ didn't quite make it up to the double top level, but I've got another level that comes in just below it, which it seemed to stall at. So it seems to be quite a big area of resistance from these two old support levels here. So could be interesting. One to watch going forward on the downside.
Yeah.
And Bitcoin seems to be struggling a little bit as well. The equivalent level to the S&P is, I guess, this one here, the double top level, which it stalled at, which is what, just below 89,000.
Yeah, Bitcoin is about to make a major moves to the upside, potentially between today and tomorrow. Yeah. So I've had my eye on this all week, and it's actually just shying off a level that I have a pending order set. So yeah, that will be. I do see Bitcoin get into 90K minimum over the next 3 days. It's just a matter of when it hits that key level to the downside, and then after that, we're going to see a continuation to the upside.
Yeah, I think I'd be buying the break of this high, the swing high, but until it does that, I'd be a little bit cautious, especially the way the S&P has broken down, because the S&P and Bitcoin were kind of doing a similar kind of thing. So I don't know whether if the stock market does start to come down again, whether cryptos get hit again. I don't know, possibly. So we'll see. It's just interesting the fact that it's stalled at that level, I think.
Yeah. Do you mind if I share my sort of analysis on Bitcoin right now?
Go for it.
Yeah, go for it. Yeah. Back to you.
One second. Let me just share my screen. Yeah, because it's been, the last 2 days have sort of been very stagnant for both gold and Bitcoin. So, but there's some action tonight for whatever reason. Let's take a look. So I'll just do a quick update on the gold position. So yeah, so that's now. So I was very shy, off my stop loss, but I'm still in this trade. So yeah, so now I do want to see a fast reaction to the upside, ideally. But if that doesn't happen, I am still a little bit cautious. I want to see how the 30-minute candle closes away from this range as well. That would be nice. But yeah. So I'm still in this trade anyways. It's currently just running. And again, I'm targeting sort of like the previous high at 3057 on gold. But taking a look at Bitcoin. So this is a very interesting one. So earlier this week, I had a pending order set. So this was actually on Monday. So Monday, I had a pending order set at 85.7K. I'm going to tell you why shortly. And then, so I'm anticipating a continuation to 89K, which is the next key level, to that 91K, right? And then if price breaks above 91K, then we are probably going to see climb back to 100. But if we do see price struggle at 91K and then a sharp decline, then we're just probably going to see a prolonged period of sort of like accumulation that could sustain over the coming days ahead. But right now, I mean, with what I'm looking at, so I'm just going to go to my other charts just to give a breakdown of why I'm seeing a long on this. Where is it? Coinbase, there we go. All right, so firstly, on the daily level, right, a key, so bullish is the predominant direction. You know, we've seen the market has given this, like after taking out a major low. So this is the low that was created at 78K, so very sharp. So I'm not sure if you remember a few weeks ago when I talked about one of the hallmark signs that major sustained move is about to happen for Bitcoin is when it aggressively purges a level and it bounces back into the range and it's sustained and it rises away from that key level in a sustained movement. And that's pretty much what happened down here. So the market came down and then it aggressively took out this low before that same daily candle closed. And then the next day we saw that continuation to the upside. So the next reasonable target, because the only reason price stalled in this level is because there was a very small imbalance right here, right? So there was a very small bearish imbalance sitting at this level on the daily time frame. So that's why we saw the market stall here, and we've seen the market accumulate liquidity over the last few days. So now the market has taken out buy side liquidity pool, the next logical thing is for it to target some sort of sell side, and the next major sell side pool on the daily is this imbalance right here. So this is what feeds my trading idea currently, right? So I do believe the market will most likely tap this imbalance at some point within the next few hours or tomorrow. And then after tapping that imbalance, that would be the confirmation that we are ready to see a sustained move to the upside. Until that happens, I am just going to anticipate the market to keep moving sideways. But the moment I see that major move to the downside into this imbalance, then I will be ready to go long. And I will be anticipating that the next major pull that price will be targeting will be at 92K maximum, which is where the next major high on the daily time frame is currently residing. All right. So yeah, so that's like the daily longer term view. In terms of the shorter term view, on the 1 hour and the 15 and the 30 minutes, of course, we're currently in an accumulatory market. And again, like with any accumulator market, the rules are very simple. The market will go from buy side to sell side to buy side. So from the top to the bottom, back to the top, back to the bottom. And right now we are sitting at the low, right? We are sitting at the low. I did see a bullish setup on this morning because there was a very nice break of structure to the upside during Asia session this morning. The market gave a very nice retest of this bullish order block and then rallied. But again, because that major low wasn't taken out, I ignored this because I didn't. Again, the dangers about trading Bitcoin without any major lows or highs being taken out is that you are going to get chopped around. You are going to get stuck within a range. And yes, you could be right in terms of your directional bias, but if your profit taken isn't accurate, you will be taking more losses than profit. So yeah. As a rule of thumb, I do prefer only taking moves on Bitcoin after it's taken out a major high or a major low. And by major high or major low, I'm referring to daily imbalances or daily highs, daily lows, and 4 hour highs and 4 hour lows. So these are like the kind of levels that I like to trade off with Bitcoin. But right now, that hasn't happened. It's been sort of like stuck in a very small range. So yes, I'm curious to see so obviously we've seen this aggressive drop to the downside during the York Open. There is an 800 EMA sitting just shy of where that daily imbalance is, and just where that daily imbalance is, we have a short-term low down here as well. So there's a lot of confluence within this range, right? So there's an order block that was unmitigated right here. There's a short-term low. There's an 800 EMA. So for me, this area is going to be a very highly reactive zone. So if I do see price trade into the zone, I am anticipating a very fast and rapid reaction away from this area to the upside if it will respect that. So yeah, so that's what I'm currently looking at in Bitcoin. So in the long term, I do see long being the appropriate bias, but I do see long being the appropriate bias from the right price level. And the right and the most appropriate price level in this case is a daily imbalance that still remains open at 85.5, 85.6K. So yeah, so that's my take on this. So right now it's just a waiting game before that next big move, if it does happen. Yeah, and then the next level after that I'll be targeting is like 91, 92K max. But anything above that, I'm not going to sit and say, oh, Bitcoin's going to go back to 100 and give a new high. That's just cultish behavior. I'm just taking what I see price is willing to give in this case, and I do see that if price were to take out that daily imbalance, it will most likely be willing to give us a bullish move to 92K. Anything above that, would be a big gamble.
Okay.
So yeah, so that's my take on this right now. There is a short position coming up. Oh, okay, this is interesting. So let's take a look at this. This would be more visible on the 30 minutes time frame actually. So that's one. There's the second leg right there. And now price is obviously forming that third leg. Right there. So I'm just waiting. So the moment this 30 minutes candle closes, that will be that third leg. So this could be a very easy trade down to my area of interest, which is that daily imbalance. So in this case, it'll be it'll be in line with so this is a bearish trend right now, right? So it'll be very much in line with the 15 minutes, 30 minutes intraday trend. So let's see if it will be worth taking this trade actually. So this is it's actually a good risk reward potential. So this is the order block. So shorts would be there. It's going to take 28 minutes for this candle to close. Stop loss above the high. And then I'll take my profit at the imbalance. So 1 to 3. This could be worth taking. This, yeah, a 1 to 3 is definitely not bad. And if this plays off, that would buy me into this trade, actually. It'll give me a nice position to take the long.
Nice.
Yeah, good.
Yeah, so I do see, I do see this long forming right now. I'm going to wait for this candle. So this is a 30 minutes candle. I want to wait for the swing low to form to give me that validation for the setup. So this swing low is going to form at the close of this 30 minutes candle in the next 27 minutes. As soon as this candle closes, if it closes away from this bearish order block, then I will be looking to place a pending order at the order block, stop loss above the high, and then I'll be looking to take my profit at the daily imbalance.
Gotcha.
Sounds good.
Right, guys, can I quickly show my charts there, Walter?
Absolutely.
We've had quite a bit of action on this side, but geez, markets just reversed. It's been a story of my life this week. Look at that. This is now the ES, but the NASDAQ actually filled that gap, and this is this wide zone I've got here beautifully. And look at that strong move back up to the upside. So the only problem was when I switched to the 1 minute on the NASDAQ here, just pull that in. You know, this strong drop to the downside, you can't really see any nice price structure like we've seen over here. You know what I mean? Just like one straight drop lower. Fair value gap formed around about here, but it's still below that price structure. And unfortunately, it's a bit too high for me to have, gotten in the trade here. So in situations like this, after that strong bounce up, if I switch to 5 minute instead and see if there's a fair value gap, then like we have here, and sorry, I can do this on the ES for you guys. Same sort of thing, right? Strong reversal back upwards again. Didn't quite fill that gap, but same thing. Strong drop to the downside. On 1 minute, I just couldn't see any nice price structure that's been broken, previous price structure. So if I go here now to the 5 minute, we've got multiple fair value gaps. There's one there, which is a little bit high up, and there's one here, a little bit lower down. So if price can make it back to, I would say the lower one, I'll be a bit more comfortable to trade that. Then I'll potentially get into a trade. Same thing happened here on crude oil. That massive drop lower and just a V-shaped bottom straight back to the upside again. I've got this on a 5 minute time frame. that I've showed you there, but it's the reason I've got those pink blocks there. It's my fair value gaps. Oops, I don't know why that's not loading. Let's just reload that quick. And you can see I've actually got pending orders down here. On the 1 minute time frame, there was a pretty clear price structure point. So yeah, the price structure was pretty nice. 1, 2. Remember, I was telling you guys we wanted to see another top of low here. Now that occurred, and then we had this move back upwards. Price broke that level. That's around about 69.17 plus minus. And as it did that, there was a fair value gap down here, and another one a little bit higher up that's actually been tested. As price broke that level, you see it's one right over there. But it was just too quick for me. It did actually test the top part of it and move upwards, but I prefer to trade the fair value gaps that formed prior to price actually breaking a price structure point. Right, so we might be getting a drop towards that level. A bit of a scary one if we get a strong drop downwards again. But I've got a waiting limit order here around 69.09, and my stop loss will then just go below this previous low here. All right, around about 68.96. So don't want to trade that upper fair value gap. It needs to come all the way down here if it does. If not, it might just continue upwards again. Or I'm completely wrong and it just slices through all of this and I'll take a small loss. So that's what I'm looking at. What is happening with my charts at the moment? Don't know why it's loading or taking so long. Looks like I'll have to log out of my platform and back in again. Well, I'll keep things here on crude oil for the time being. Do you guys want to show something? So that's what I'm looking at. Let's see if we can get a full. Maybe if I do get a full, I'll take over the screens again. I just actually want to, on my side, while you guys are showing your screens, log out here and see if
I noticed, Richard, you
resolve this issue.
You trade very similar structures to what I look for. Even like that setup that you're looking at, the where you're looking to enter is pretty much where I would also be looking to take my position. Except I'll be looking to enter a bit earlier, like at the top of the range, as opposed to all the way down the imbalance. But it's still like that imbalance is still a very, very good area of interest for trading too.
But let's see. I just worried that my ES chart's not loading here. Right, guys, maybe take over there, and then I'll just quickly reload things on my side. If I see something happen, I'll share again.
Yeah. Can I just jump? I can see Andre's got a question about sterling dollar cable.
Sure.
If I can just quickly jump in there. 1 second. Okay. Okay. So the question is cable intraday. So what we had is the breakdown through the support level late yesterday, and that I think has trapped the sellers, the last few sellers in this downtrend. Remember, we were talking about looking for this to this is a corrective move and looking for this to base out between the two lines I showed a little bit earlier on. So in the short term, we've got these people trapped under the previous swing low. We saw quite an aggressive move up earlier during the session, and we've been trending higher. We've got an initial rejection on the GDP numbers. We got the flip higher, and then with the rejection from the big resistance area here. So I think what we're doing now is we're doing a little bit of chop. There's a possibility it could come down to the low 129s, a little bit lower down. But for me, I think as long as we can hold above this last higher low, then if we can stabilize there for the next few hours, then we can start to gravitate back up towards the top of this range again. So that's essentially how I see it. slight risk of a little bit more to the downside after the upside rejection, but looking for the thing really kind of to hold perhaps above this higher low, comes in just above 129, the figure. And the other question we had was about the dollar and Trump tariffs. What's the importance of April the 2nd, and where can the dollar go in your opinion? I guess if we're talking about April the 2nd being deadlines on tariffs, possibly. Either way, I don't think the technical structure is going to be massively affected. As I say, for me, we're doing a corrective move down against the uptrend in euro dollar and cable sterling dollar. So we could continue to whip about before we make the next leg of the move. But I think it's a correction, and whatever happens with with Trump and all the fundamental stuff, I think we're just unwinding an overbought condition before we continue to new highs for the trend, new lows for the dollar, basically. Okay, Walter, back to you, man. How's your trades doing?
It's going good. I'll show my screen again. There we go. That should be live now, I think. I'm not sure. All right, there we go. But yeah, so gold is running well right now. So yeah, it's running pretty fast. So I did think this reaction was going to be quite fast, but I have a point. So my area of interest now is this order block. So I'm curious to see how the market will react when it gets to this order block. If I do, because there is a possibility that we could see the market, retest the order block and basically give a lower low. But at the same time, if I do see because again, within this order block, there's also this imbalance, so that confluence has made it a little bit uneasy. But if I do see a firm close within the order block range, in this case, I will move my stop loss to break even to protect my bottom line, because of that level of uncertainty within this area. And one of two things could happen thereafter. Either is you see a continuation to the upside, and I do get a target hit at 3,057, or the market reacts against the order block, comes back down into my entry point, and I get out of this break even. So yeah, so that's just like a small update on this. Yeah, so this order block has made me a little bit apprehensive. So I'm just curious to see how the market will react when it gets there. And with Bitcoin, really, so I think the Bitcoin setup actually is short. This is a much stronger setup than the gold. So yeah, so I'm just waiting for that 30 minutes candle to close. So it's still 60 minutes until it closes. As soon as the candle closes, I'm placing a pending order, because again, this is very nice. I'm placing a pending order at 86.75 with the stop loss going just slightly above the high, 86.17, and then take profit at 85.55 for a 1 to 3 opportunity. So this is something I'm actually really confident on, because I do see price trading down towards that daily imbalance. It's just a question of when. So yeah, so right now with Bitcoin, it's a waiting game, and with gold, it's a waiting and an observation game.
I don't know what's going on with my charts.
I'm not sure if any viewers had any questions. If you guys that are like watching, you have any questions, or you needed any clarity on anything that you wanted, Howard, Richard, or I to go through, please, obviously, feel free to leave a comment. We're always more than happy to go the extra mile and explain things in more detail if needed.
Absolutely.
Yep.
Look at that. So now price is now traded into that order block. So 13 seconds. I want to see how price. I want to see a very strong close in this range. I don't want to see that really nasty wicky candle that would wick all the way back down and close out of the range. So yeah, there we go. It's a nice close in the range. It's So I'm just going to move my stop loss to break even now. Let's see. Let's move that over to the other screen. Let's see. All right. So yeah, so that's done. Now just protecting my bottom line on this.
Very nice trade that on
Very
gold.
good. Yep.
Thank you. These kind of trades are always the what's the word? Not frustrating, because you usually enter when you see that big drop. That's usually when you enter and there's that risk of getting taken out. But the trick is always having a nice distance with your stop loss and giving price enough room to breathe and just being patient with it. But yeah, I don't like this reaction I'm seeing right now. Yeah, I'll just be patient with this and see how this runs. Yeah, I'm not. See, it's very nice to see an active New York session for gold. Honestly, like it was like this last 6 months. I'm not sure why, but a lot of the action for gold has been in Asia and London session, or predominantly Asian session. And the New York session either is taking up the leftovers from Asia and London, or the price is just like relaxing and accumulating in New York, waiting for the next session to start, waiting for the session changeover.
Yeah, it's funny. It's a bit like foreign exchange, isn't it? Yeah. You never know when the action is going to come, do you?
Exactly. Exactly. Like with some, like for example, with a lot of the dollar pairs, it's very predictable. You get your action in the New York session. But pound dollar again, it's always a hit or miss. You could get a nice setup in London, like a layup, but then the move doesn't happen until New York open. And then euro dollar again, it's also that hit or miss as well. You could have a nice layup session in London, but you might need to hold that position into New York to get a very nice move. Speaking of which, I'll just take a quick look at pound dollar. I don't look at the Forex pairs as much as I used to, because I mean gold and Bitcoin is already plenty to deal with right now, but it's always nice to sort of always from time to time see where these levels are at. There's a nice bearish channel on GU. Interesting. Howard, what was your take on this earlier? Were you looking at bearishness on an intraday level, on an intraday perspective?
On a very short-term basis, it rejected from the resistance of a couple of days ago. Those spike highs. So maybe a little bit kind of sideways down over the short term. But I think who is selling the break of the swing low. So I think that's probably a major low. But obviously, it'd be nice to see
that last part again.
Yeah, I think the low that we saw yesterday is probably the end of the correction, the end of the bear swing.
Yeah.
But obviously, I want to see it a little bit higher just to really confirm it. Get back through those like today's high, the high of the day before kind of thing. I think once we can clear those levels, then that'll be off to the races.
It was a very significant. This swing to the upside was very aggressive. When did this happen? This happened during the session open.
Yeah,
a very aggressive swing to the upside before trading back down. 1, 2. Let's see this. 3. Yeah, this is the beginning of a new bearish cycle actually. There's 1, there's 2, 3, and let's come back down. All right, okay, I see what's happening here. I agree with you. So you're anticipating price to take out this high, And then after taking out this high, you're anticipating a move to the downside.
No,
Yeah,
I'm not
I see
bearish.
that
I'm not bear. Yeah, I'm not bearish at all on this one. Maybe in the short term because of the rejection from the resistance, but
But in the
I think
longer term, bullish.
yeah, I think we break through the 130.15 high, whatever it was a few days ago.
Let's take a look in the 1 hour. All right,
Yeah,
so there's actually some relative equal highs here that are looking to be cleared out.
Yeah,
very soon.
I think once we get through there, then I think we're off to the races.
Yeah, because actually there's very little resistance between this high and the next high at 1.3.
Yeah, that's
and then if we get higher than that, then
yeah,
it's interesting actually. Yeah, I did see a bullish setup forming now actually on this. So now price is in a bullish order block. Something like this, like obviously, is a confluence of this fair value gap and another fair value gap down here. So one can take the first fair value gap coincides with where that imbalance is, and also that 800 EMA price is broken above it. So this could act as some form of a dynamic area of support for price.
Oh, sorry. Could you show your screen? I think yeah, it's not coming through, but
it's not. I'm already sharing it. Not sure what happened.
Just disappeared.
Ah.
I'm having issues today.
I think there's been some. Yeah.
I still can't load my charts. Only crude oil showing. One of those days. Oh, there we go.
There we go. Perfect. Yeah, so the setup for this is actually a very simple layup. So right now, the 30 minutes trend cycle is very bullish. So we've seen that first initial expansion. We've seen that break of structure. This was just a price trapping above this high, running for buy side pull. Now we are going to see a price run for sell side within this order block. So there's two areas of interest for an entry. The first is where price currently is, which is this fair value gap right there. So I'll make that, let's say, red. Right. And then the second area of interest is the short-term low, which also is visible on the 30 minutes time frame right there. So we have two lows. We have this low and we have this low down here. So yeah, so one could go along where price currently is.
Can you see it, Richard?
Can't see my screen.
Yeah, it's showing on my side, but it's a bit of a lag, and it's getting a bit blurry.
Lag. That's interesting.
Okay, I can't see it at all. I'm going to refresh.
No, I see it.
Oh, you see it now.
It's one of those days, guys. Like I can't even load my my S&P and NASDAQ charts.
Oh,
but that's obviously nothing to do with the streaming.
Yeah, I think it's to do with the software itself.
He's probably having connectivity issues.
Okay, we're coming through.
All right, let's try this again. Okay.
Ah, here we go. That's
Andre, can you see my screen as well? Andre, you were showing it's not showing up when you're having issues with the graphic.
Looks all right now.
That is good now. Awesome.
Yeah.
So yeah, so it's two areas of interest for an entry within this order block. The first is this fair value gap at 1.29, and the second is these short-term lows. The lower low is obviously the most significant one at 1.29132. So if this fails, if the market keeps sort of trading lower and lower, then this would be a good opportunity to enter. Stop loss would go below the order block, right? So obviously below this order block, there's this fair value gap as well. So in case the market gives a very sharp drop into that fair value gap, I'll put my stop loss just slightly out of arm's way. And then profit target wise, I do agree with Howard. I do see price heading towards these daily highs. So we go into the 1 hour, it's a bit more evidence. So we have this high right there. These are relative equal highs. Market will most likely clear out these highs when it starts making a move to the upside. And of course, when it clears out this highs, there'll be very little resistance to the next major drawn buy side, which is a daily high at 1.30. But for, again, my personal philosophy when it comes to profit objective is I go for the next reasonable objective. So why? Because it's very hard to anticipate what price we do at certain levels. So I'd rather take profit profit at these highs because this is the next most reasonable place that the market would most likely head to the upside. Risk to reward. So if you enter obviously from where price currently is, which is this fair value gap, stop goes below in the same place. Obviously, you're looking at a risk to reward of around 1 to 5, which is not ideal, right? So if you were to enter at where price currently is, I would simply aim for the daily high for 1 to 2.8. However, if price were to trade a little bit lower to that short-term low, and you get a very nice entry and the market does give that rebound move, then I would personally aim to take my profit at the first series of highs for a 1 to 4 R2R. But anything less than a 1 to 2 R2R trade for me personally isn't really worth taking.
No.
Oh, 4 minutes until this 30 minutes candle closes, and I'll place my pending on Bitcoin. And then gold looks like it's heading towards my target. So that's been moving really smoothly.
Nice.
Looking good.
Oh, there we go. All right, so it looks like currently that order block, it's been, it looks like the market will not respect it. So the next confirmation I want to see is a very strong kind of closing above this order block. The moment I see that, then I know that there's a very high likelihood that we are going to see price hitting 3.057. You know, today was one of those days where like Monday, Tuesday, Wednesday for me was like it was really frustrating because the trades were like the right moves, but then I wasn't hitting TPs because the market was just chopping around. But today, like I know 2 nice trades and now the 3rd trade, and it's just made a week worth the frustration.
Yeah, I had a really good week last week, and this week it's also been quiet until today, and we get like nice almost setups, and then it just the bus leaves without you sort of trades.
Oh yeah, those are the frustrating ones. Those are the absolutely frustrating ones.
Yeah.
But yes, I mean this is the last week of the month. Last weeks of the month usually are not so bad, and then obviously next week we have NFP week, where the madness begins again. So yeah, resetted. 2 minutes, and then we're placing the order on Bitcoin short. Yeah, even this was just so frustrating. Just chopping around this range, but now finally it looks like it wants to break below. So I do want to see a very strong move to the downside. Please do not let us down. No worries, Mohammed and Andre. Did you guys have any further questions? I will start sharing my analysis in the Discord channel as well. So I recently have had like a channel there. So I will be updating you guys on sort of like trades and setups that I might be taking earlier in the session, like in Asia and London, if you guys do trade those sessions. And of course, like if there's anything I'm looking at in the New York sessions where I'm not live streaming, I will share that in the channel as well. So make sure you're all plugged into Discord if you want to be getting a lot more updates from all of us.
So what's the time at yours there now, Walter?
It is 22:29. Yeah.
Oh.
Yeah, so 2029.
Right.
What's the time where you are, Richard?
The London session will be pretty nice for you to trade then, right? It's now.
It's after this. Like
4 here at the moment. Howard.
Yeah, I'm half past 3 in the afternoon.
Okay. So our difference.
Yeah.
Near me. Nice.
Yeah, the European times are also very good as well. I mean, I used to live in the UK, but it was also like Asian sessions were not tradable because it was at midnight. And I never cared for it, to be honest with you. It was just the London and New York sessions that I cared for. but then moved to Asia, and then all of a sudden gold in Asia made sense. And then I just cared for Asia and London, and then the occasional New York sessions. So when I'm back in London in September, I'll be back in London for like 2 months. It'll be interesting to see if I can abide to the late night sessions for Asia.
Yeah, that'd be tough.
Yeah,
that will be tough. But I look forward to it. All right, there we go. So that 30 minutes candle is now closed. So this is like, now the thing is very important. The reason I like to wait for candle closes before taking a trade is because a lot of the time, you know, if you make a decision before candle closes, what I found with experience is that sometimes I can rush into a trade a little bit too fast, right? And actually could miss a better price because I didn't wait for that candle to close. Because, by the way, can you still see my screen, or has it gone completely blank?
No, I can see it still.
Yeah, so if, for example, let's say this 30 minutes candle closed, like, let's say somewhere in the middle of this order block, right? But I got a bit excited that I got in somewhere down here. Then what I did is I missed out on a much better entry price, right? Or even worse, if that 30-minute candle had skyrocketed and closed at the top of this range, right? And I got in a bit too early before the close of that candle, then I would have been stopped out. And I could have avoided that stop out if I'd simply waited for that candle to close. Another reason is because swing points for me are very crucial levels when it comes to, again, identifying where I am within a trend cycle, and also identifying take profit objectives as well as entry points as well. So the fact that the market has formed the swing point for me is a good indication that this level is very well respected, but there's also a major liquidity pool below these price points. And if we are going to see a move to the downside, it will very likely to trade below these levels. So it just gives me the added certainty of where price could potentially go in the short-term future. So now the price is obviously giving that swing low, and it's giving a close away from this bearish order block, confirming this as that third leg. So my penny, because there is no fair value gap on the 30 minutes candle that's on the 30 minutes time frame that's visible. On the 15 minutes, there is no fair value gaps either. So my pending order simply goes at the bottom of that range, so the bottom of the order block, and then my stop loss goes slightly above the high. Again, just pay attention to the fact that there is a small fair value gap right there. So I don't want to have my stop loss right in there, because the market could swing all the way up, tap into that fair value gap, and then drop to the downside. So hence why my stop loss is going to be above that, just away from harm's way. Obviously, if I do get stopped out, then for me that invalidates the setup entirely. So that's sort of like the ideology behind why I like to wait for the candles to close before I enter a trade.
Makes sense.
Yeah, same here. Yeah, looks like it's gonna head that way. Came very close on the previous one.
Oh yeah, I mean, if it's closed like that, there's nothing, there's barely anything there. There's like this small fair value gap right there, which price is rejected. So it's now running for some sort of buy side pull. So it hit it, and then it came down after hitting that, and then it came in here, and then it hit this fair value gap down here. So yeah, it's gonna run for buy side, which is above this high. There's also the 800 EM on the 5 minutes, which is in the order block. So it'll be interesting to see if the 1 minute and the 5 minutes 800 are in similar areas. So it'll be interesting to see if the market probably would run to retest that 800. Because again, 800 EMAs act as an area of dynamic support and resistance for price. I don't know why. It's just a behavior I've noticed over the years. It's super consistent, super reliable. I don't just use the 800 on its own to make a decision. I would always use it in confluence with other price action indicators. So I would use it in confluence with order blocks or prior highs and prior lows. So for example, like in this case, like a 5 minutes order block with an 800 EMA in it, I could potentially even place a pending order just right there. But the reason I'm not doing that is because there is nothing else confluent within this range. Like there is no fair value gap. So I look for something known as like it's called like free, the rule of free. Free is more powerful than if there was 1 or 2 confluences. So the free confluence that would have been a lot more powerful is if there was a short-term high, the 800 EMA within the order block. That is a very powerful confluent, and I'll be like, okay, that's a good place to place some pending order above that short-term high. Or if there was a fair value gap with the 800 EMA within the order block, another powerful confluence to go for. But right now it's just the 800 EMA in the order block sitting there. There's nothing else there. So hence why I'm just going to place my pendant at the low of the order block, because again, I do not want to risk not getting into this trade, because market could simply tap the low and then run to the downside. So I'd rather just get in a trade. If price keeps running into the order block, that's fine. I don't mind taking a little bit of a drawdown, as we've seen on gold. Taking a bit of a drawdown can pay off. You don't always need to get perfect entries. Sometimes just having a nice entry in a nice area and then just holding that trade pays off in the long term.
Cool.
Nice.
The gold's looking good.
Yeah, it hasn't given that fight. It's still playing around in its order block. I mean, this next candle has given a nice close in the range, but I want to see a very firm close outside of this, just above the swing high. After that, then I'm like, I can rest easy. I mean, I'm still resting easy right now because this is a break even, but still, it'd be nice to have that added confirmation.
Yeah, interesting. The sterling dollar cable has formed a little bullish reversal candlestick in that support area. So interesting to see if it can start breaking above on the 30-minute.
Ah,
so that could be the first signs. if you're doing that kind of scalping type strategy.
Mm-hmm.
How would you distinguish scalping from day trading, for example? Because I feel that sometimes traders use them interchangeably.
Yeah, I guess it depends on what you do during the day. If you're looking for the trend of the day, that might not necessarily be termed as scalping. If you're looking for multi-hour move, whereas if you're looking for just a few pips here and there, then I'd call that kind of scalping. But I guess they could both fall under the umbrella of day trading.
For sure. Yeah, I always thought like scalping would be like very short-term hold periods, right?
Yeah.
Also just going for a few pips here and there, sort of thing. Something I tried in my beginning years, but nah, not for me.
You need a certain mental acuity to scalp, especially for a prolonged period of time in the market.
Yeah.
Yeah, I find it very inefficient as well, because you just every trade you place is cost, is spread or commissions, and it's like,
yeah, I mean, it racks
the higher the trade frequency, the more the cost you build up in your trading, and the more you actually need to make in order to actually break even. And in the long run, for me, that doesn't just the math just doesn't add up.
Yeah, like eats into your profits big time if you're profitable in the first place.
Yeah.
Yeah.
Right,
there
guys,
we
I
go. Nice
got my cards back,
but
we just had one heck of a strong reversal again. Like I said, story of my life these days.
So did it retest? Did it come back down to the order block?
Did exactly what I thought it might do. My charts came back finally.
Oh yeah, amazing.
Yeah. So can I just quickly share? Unless
absolutely,
you in
please go for it
now.
Yeah, so it's now triggered. It's now triggered my pending order.
Okay.
So now let's see if I get stopped out. It looks like gold is gonna hit TP. So yeah, so now the Bitcoin is triggered. So let's see how that rolls.
Nice. Yeah, it's been a bit frustrating. First I had some issues getting into the trading room, and then I lost my charts on the ES and the NASDAQ, but that came back. I had to reload things, so all good. It's not showing now, is it? You guys, there we go.
Here we go.
All right. So, yeah, this just shows again how you get these reversals although it might look very scary, we had the strong drop here on the crude oil chart. 5 minutes, entered into my time zone, and boom, or time window, and straight reversal back upwards again. There was actually this little gap yesterday, which is currently filling. But yeah, unfortunately, I've shown you guys, I had my orders down here, and they were actually there while price was still pretty low, around about 69.20. Just didn't get that nice little small reversal back again to fill me, and boom, straight back up again. Similar thing here on the ES, which is weird. It didn't fill that gap as nicely as the NASDAQ did. Remember, I told you guys it'd be interesting to see what happens if that gap does get filled, which is this huge green zone over here. Just pipped the low of that gap and boom, straight back up again. Same thing on both the ES and NASDAQ. It didn't have nice price structure points to actually see if price is going to give us, or that early indication that we might get a reversal. So again, a V-shaped bottom. It's been happening quite a lot these days. Or V-shaped tops, inverts V-shaped tops, and you just get these very, very strong reversals. This is what I meant by last week. Few very nice setups here where, price actually bottoms a little bit, ranges a little bit, multiple opportunities to get into a trade there, and then a strong move back up again. So that's sort of the trades that I'm used to. But yeah, obviously things being very volatile these days, it happens. You're right about direction, about what you want to be trading. You plan that for me. I want it to be long. And then boom, market just reversed very strongly. And this time, both the ES and crude oil. So I didn't have any opportunity to get in there, unfortunately.
Yeah, is it one of those situations where you've got to bite the bullet, and if you do bite the bullet, then you be prepared for a big swing against you, kind of thing?
Yeah,
one of
yeah. And I find if I break my rules, then I mean, it's almost worse. Like if you do break your rules and it does go your way, it just forms bad habits, right?
Yeah.
My early indication is that I want to see a price structure break on a smaller time frame. And when you have these strong drops into a low or a high, then you don't have those price structure points to identify clearly. I want to see it clearly stand out like a sore finger, rather than go guessing about things. Because as soon as I start guessing, I see things that's not really there, and then you get a hiding. But anyway, so yeah, we'll try again. Right about direction, right about the setups, but just not, the market's just too fast, unfortunately, today. Right, guys, so I think we got 3 minutes left, unless you guys want to show something. Walter, how's your Bitcoin position going there?
So gold has hit TP. Bitcoin is still in the game, just very shy of my stop loss. So I'm just keeping an eye to see if it's going to get hit or not. So I'll show you. It's interesting. I love when price just moves in a reasonable fashion, which it hasn't been doing for the 3 days, but today it's been doing so.
Okay.
So I'm just sharing my screen now. So so gold has hit 3057, so which is the highest point it has hit ever anyways. So that's trade's done. As for Bitcoin, it's just shy of my stop loss. So as I mentioned, right, there was that imbalance, and I was like, cool, there's a likely price to come and tap into that imbalance. So that's a question. So right now, so that will be an interesting thing to see shortly. I'm a daredevil, man.
Did you get hit, Walter? I think you're off speaker there. Howard, can you hear me?
I can. Yep. Yep.
Right. I see there's a question that came in as well. Walter, you still there?
Can't hear the voice.
Well, quickly, is that for Luang? Hopefully I'm pronouncing your name right. Is asking what pips, ticks, and points are on trading. So pips are typically a term used for Forex traders, where ticks are mostly used for your futures traders. Am I right, guys? So pips are the increments. Every single increment that a market moves is either a pip, if you're referring to Forex, or ticks in futures. Normally, if you take like the NASDAQ and you look at futures, they move in increments of 0.25. And there'll be 4 ticks within a point. So point generally in futures also is a dollar value, right? So it goes from 400, let's say, I don't know, whatever market, but like when it moves a dollar, that's a point. So it's the increments between the points that is referred to as either ticks or pips. In the Forex guys like using the term pips, where the future guys use it as ticks. So also you can also refer for pips depending on your position sizing or lot sizing. It's moving, so many dollars or euros or whatever your currency is on your platform that you're trading with. So many dollars or euros per pip. Normally, when it comes to ticks, we talk about futures contracts. So there you buy one contract or sell a contract if you want to go short. And if it's on a E-mini S&P, for example, there'll be, $12.50 value per tick. All right. You can't really go and control lot sizes on futures like you do with Forex unless you trade the micro contracts, which trades at 1/10 of the value of the E-minis. Right, so that's pretty much what the difference is. It's just pips. Most of your Forex guys refer to pips and ticks for the futures guys. And the point's normally a dollar move. Hopefully that answered your question. Luang?
All good.
Yeah? And guys, I think we're slightly over time there. So unless there are any more questions, then we might have to end things here. Bit of a frustrating week for me, that is. Hopefully I have a better one next week. Walter, can you hear us? I think Walter's on mute there.
Yeah, I can. Yeah, it looks like a mute button.
Oh, yeah. I was on mute by mistake. I didn't realize.
No worries.
I didn't realize. I said Richard. I even said Richard. That was a very beautiful explanation of the difference. Like I said, I don't think it could have been explained any better. So, but you didn't hear that. Sorry about that.
No worries. Thank you very much.
Perfect.
But yeah, I hope again. I hope you have. Tomorrow's another day, right? The week hasn't ended yet, so I really pray you have a fantastic trading session tomorrow.
Yeah. Thank you very much. A nice trade today.
Yeah. No.
Good work.
Yeah.
Thank you.
Lovely trade. Really good.
Thank you very much, guys.
See you in the next one. I'm only going to be back next week, Monday again. So have a good rest of your week and weekend.
Thank you very much. You too. Have a wonderful weekend ahead. Okay. See you next week.
Thank you very much. Take care.
Bye-bye.
Bye-bye.
Hello, Paul.
Hello, sir. How are you?
I'm okay. How are you?
I'm just having a really bad hair week, man. I don't know what's going on. All week, you just see me doing this on the streams. I'm like, I don't know what's going on. It may have something to do with the fact that I don't wash it very often. How are you doing?
I'm okay. I'm okay. This was a great trading week for me. Great trading week. So sometimes I think more luck than knowledge, but we will discuss during this session. So we will see. We will see.
Yeah.
Yes.
When I get to Thursday, I'm just like, huh? It's just one of it's my whole life. Thursday's been. I used to have like oboe lessons on a Thursday, and I never practiced. And the teacher always just laid into me to the point that people would come and listen to my lesson just to hear me get told off. But so Thursdays for me have always been a bit weird. So I see the markets very differently on Thursday. I'm just like, oh, I don't know what's going on. So I'm waiting for Friday for a clearer picture.
Yes.
So what you been looking at?
Today, I just watched a lot of economics news, and I just want to discuss a little bit about my trades from the last 24 hours. So I just made some record some trades, and I'm ready a little bit to discuss because I think it can be interesting lesson maybe for all listeners right now, because some situation that all we can be there very easily, and sometimes it's very hard to make decision what to do. Should I exit? Should I stay? And so I think we will discuss a lot. So, and I will have a lot of questions about crypto later when you. I just saw few questions last 7 days from the few visitors here, and I think that I will have something to ask for them.
Well, I will do my best to answer them.
So I will just share a screen related first about the news. I just want a little bit to discuss about this. So this is the today was important day for all major currency pairs because the final GDP we got a little bit better than expected news for the US dollar. But when I read all these articles after this report, I see a little bit disappointed because everybody talks that all these data that we are getting right now, everything is from the period when the Trump became a president of the United States, and when stocks started to go up, crazy move, and the US dollar started to go up very, very strong. Everything was great for a US economy. And there is a little bit doubt that this is the too old, like I said, too old information for traders. So for economists, it's interesting, but for traders, it's little bit nothing special in this moment, especially this GDP in March, because when we make analysis and go, for example, if you just press this button here and just to start to watch the history, you will see, for example, March 28, 2024, we had the same thing. Expected 3.2, we got 3.4. So this is very similar to past year. So this year in the fundamental data similar, but when we look the chart, everything is different because the last year we was in macro structure completely different, and now it's completely different, like in the mirror, and people a little bit confused about all these data and the charts and everything that they watch. So this is the problem here, is that we have a news for the last 1 month, tariff war and everything, and the impact of that news is a little bit much important than all these fundamental data that are still important, But as we can see, all currencies got very good GDP report in March. Aussie, Kiwi, Euro, British pound, everyone was very good in that data. So this is the something that, everything is fine there, but we need some kind of edge, and traders cannot find that edge in this results. So this is the something that I'm watching. But like I said, all these things that I see right now, the impact is for maybe 1 hour, 2 hours, but nothing changed on the charts just because of this GDP reports. So I'm just flat related to the news, and I do not think a lot of positive things about US economy just because of this GDP final report. So right now, what I want to talk is a little bit about my last 24 hours trades. Paul, can I show this? Okay, so I need to discuss about this, but first let I share the screen just to show these trades. First, I will talk about British pound dollar. I have this. I will just change my screen to catch the whole screen, entire screen. Just a moment, like this. So this is this moment. So someone, just to check, do you see? Yes,
Yeah,
you see. Okay.
Yeah.
Yeah. So what's happened in that moment? Just a little bit. Stop this. Like this. Okay. So what's happened? Just put it a little bit here, like this. Okay. So I broke my rule, because my rule that I trade always when I monitor a 30 minutes trend line on relative strength index. Why I did that, I will just explain one more time again, because I had a different setup here based on statistics. And statistics is like this. We have British pound dollar. The British pound dollar major structure on the daily chart is bullish. And I have a data for the last 20 years. Whenever we have consumer price index data that are bad for British pound dollar or good for US dollar, we usually have situation that price just drops half daily average range. And then after that, price start to go up. So what we had just before the news, our price was around 1.2940, and price started to go down. We had around 1.29, little rejection on just on the 15-minute chart, but nothing happens. I wait for the half daily average to range, and we have very important price level. This price level is at 1.2990. 28.90, and on that price level I entered a buy order. So it's a counter move trade, because we were on the bottom. My relative strength index trend line was not in my direction, but I had statistics on my side, and this was the main trigger. So this was a trade. What I did, I put a free lots volume. My stop loss was 1.2855, just 5 pips below the strong support in 1.2860, and I put 1.2960 as a target. So my target is 70 pips, and this was my trade. I monitor on the 15-minute chart. I saw that we got the first bullish candle. Of course, it's just a lower time frame trade, and I just put that trade to go little bit higher. I wait to see what will happen, and this recorded video is just a few minutes after I took the trade. Now, what I will show is, I will show you what happened with the chart. So after that, this is the period when I took the trade. I think 1.20 I-90. Yes, this is it. And I had a session. I had a session with Jannie and Richard, and we discussed my trade. And on the end, I put my trade, didn't close. I wanted to touch the stop loss because I said myself in this year, if I entered the trade, I would just keep that trade as it. And what's happened? Statistics again, right? So price just went touch 1.2965. Of course, I closed my trade because of the target 1.2960, and I made 70 pips profit. Even I broke my rule that I should always respect my 30-minute relative strength index trend line. So of course, that statistics were stronger than me. I had some doubts, especially as you can see at the end of the day, we really almost reached maybe 15 pips. We were from the stop loss, but they didn't close the trade. And as we can see, it was the right decision. So sometimes I just think about this. Sometimes we really need to respect our statistics, and that was that trade that I had, and it's really good. And the other trade that I created on yesterday was the trade that I was preparing to do. I think remember, together watch the US dollar Japanese yen. So this is the moment when I watch everything. So what I did, I put the stop loss in the 149.5, and I entered it into the trade, and I will discuss this trade just to see the moment when I this is the moment when I enter into trade. I reduce my volume because it will be a little bit longer trade, and I put, believe or not, my target is 158.
I don't believe it.
Yes. It's a really, why I did, because this was the Jannie's suggestion, because I already have Aussie dollar buy trade long term. So 500, 600 pips, how much? I don't know anymore. And on the other side, this is the buy trade for US dollar Japanese yen. So one trade is following US dollar, other trade is against US dollar. So I'm hedging. So I have two trades. If something crazy happened with US dollar, I know that I will be protected in that way. And in this way, I really have the normal setups. And of course, that trade, like I said, passed. Now I will just show in better way how chart looks like. So the chart is this. Okay, so I will go first to the daily chart just to see. This is the daily chart. We broke the channel. I wait to price pull back up to the trend line and to make a trade. But there was a problem there, and I will just describe one more time. I will just describe where was the problem. The problem was in this moment here. It was the afternoon on the March 25. This is the moment. Look this. We broke the channel. We went up, and then we touched the trend line to the pip. The trend line, the channel trend line. Yeah. We touched to the pip and start to go up. So this is perfect to the pip. We just broke, test, retest, and we went up. Yeah. But I was in the car and I was driving and I didn't catch this moment. So what I did, I wait the price go up. I wait for a small pullback, and in this moment, around 150 level, I made a purchase and put stop loss to the below the previous low. So this was the situation, and right now I'm around 90 pips in profit right now. But like I said, I want this trade to go to the January high. So it's not so far when you watch about months. So if we need 1.5 months to go down, I think that 1 month is enough to go up. So there is a chance that we can go up. Of course, always I can close the trade, and especially now when I'm 90 pips in profit, I can little bit relax, maybe move the stop loss to the break even in some moment, but I will wait a little bit more. And like I said, I can get something from this trade. So I am just monitor my trading journal, and I realized that all my swing trades is so good. And the only mistakes that I make are usually on intraday level. So sometimes I really start to think that swing trading is a really good way of the trading. But this is just the hype. I know that sometimes when I have a good strike of the trades, something in my brain start to push me that I'm good or something like that. And very soon in few days, I realized that that it's not true. So
I know exactly what you're saying. It's it's like, this is why we tell people to take a trade, then go outside, because if you have a winning trade, right, you're like, I'm the man, or I'm the woman, right? I've nailed this. I'm gonna do it again, right? And then that's when things start to fall apart a little bit. So it's very good point.
Yes. And for example, my Aussie dollar trade is just in the same state. I'm really almost 100 pips in profit still. We didn't break this trend line here on the chart. We didn't break our trend line on the relative strength index indicator. So I'm bullish still, and I believe that we can reach this very high level here with the 600 pips. So from now, so I know that when the people look this, it's a little bit crazy, but I will just monitor my trades because I have so beautiful entry points, especially for Aussie dollar, and now for US dollar, Japanese yen. It's a really good. It can be much better, but it's good enough and right now. So this can be really interesting on the swing position trade. And when we talk about intraday trading, as we can see, the price is at 1.2960, and I will not trade British pound dollar today. And the reason why I will not trade the British pound dollar today, because tomorrow we should have retail results report from the British pound, and it should be negative, really negative, maybe more than expected negative. So I will just wait maybe to catch some lower point. I think that maybe we can see some push down, then push higher again. So these levels right now are not for the entering into the trade. But like I said, I'm bullish. My bullish bearish validation point is at 1.2890. So above this level, I believe that British pound dollar can reach new highs, and this is my today's setup for British pound dollar. But I think it's not a good idea to buy right now, just because of the tomorrow news, and that news will be early in the morning before the London's open. So that can be really messy. So I think if someone who like to trade British pound dollar and can wake up early in the morning, maybe you can catch some good price level to enter and make a buy order. Of course, if we do not break this my bullish bearish validation point at 1.2890, so we will see what will happen. So this is my setups. Just I want to share with you for today.
Well,
So
I mean, that set you had with the Japanese yen, was it USD GPY?
yes.
I love those setups. Those are my favorite setups to trade, where you're essentially you're breaking out of a diagonal trend line, but then you've got an opposing one as support. I love them. Those are my go-to setups, right? Because whenever you're breaking out of a pattern and then you come back down with some support confluence. I mean, because whenever you're breaking out, traders are always wanting to see, where can I enter on the retest? And when you've got a descending diagonal trend line, obviously when you break out, the retest is probably going to happen at a lower price point to when people entered, because you've got that diagonal trend line. So you break out here and then the retest is a bit lower. So it's always a bit of a difficult proposition for traders. But when you've got that diagonal ascending trend line coming in as support, that then gives the people who are watching the breakout a level where they feel confident to buy in, you see. And it's the opposite, because then if that line fails, the retest on the opposite side comes in at a higher price, which gives them more opportunities for risk management. So those setups, when I see them, there's probably a few I've got today, fantastic. They're very profitable. It's a shame you're in the car.
yes, but I remember one time I just should work for some company to trade equities, and I didn't feel comfortable to trade equities because I like Forex. And what I did, I used the 4-hour charts, put the channels there, and used this setup like for US dollar Japanese yen. Wait for the breakout, then we have a pullback, and then I make a buy order, swing trades, and I was keeping very good with very small amount of knowledge related to fundamentals, related to setups and everything. I just used that channel, breakout, retest, enter. So it was very simple strategy, and I know that it's very, very good for, I think, any kind of asset. Whatever we trade, we can apply this strategy, and it's really, really good. But like I said, for a longer time, trade a little bit, because it's not for scalping.
Yeah, for sure. Yeah, no, that would have been that entrance would have been fantastic. But we've all been there. We've all been out of the house, unable to, or refusing to trade on our phones, because I mean, who does that, right? I don't know who does that. I mean, when I'm traveling, I find it frustrating enough just consistently having just even though it's a big laptop screen, I feel so restrictive. And it's one of the downsides of being a bit of a nomad sometimes, because you really want that epic multiple monitor setup consistently to give you everything. But news. Yeah, just talking about what you were saying with regard to the current data points which are coming out at the moment, and we briefly touched on this last week, or some of us did. It's this thing that is about context, like we were talking about when, like a year or so ago, when we got the first kind of bullish CPI data from the United States. And obviously this is a global economy, but the dollar rules still, for better or worse. And obviously the first kind of sign that the inflation is slowing, that data point is very bullish, simply because it's the first sign that the hit from the pandemic was over, and then the markets move as a result. But now the context is completely different. Everything which is happening at the moment, as you said, we haven't got the data points for that yet, and which is why the Fed in the United States was very hawkish, or cautious, shall we say, because even though the results are fine, it's like we know there's going to be an impact on prices, even if the tariffs and the trade war stops, because the confusion has caused a lot of uncertainty. So it's that thing. It's where in any country, in any administration, they blame the previous administration for everything, right, and don't take any responsibility for their actions. And then it's just insanity. But this is why you really have to think about what's going on and what the impact is going to be down the world, because businesses have to do this. Businesses have to play this prediction game, because they can't afford to sit down and wait to see the impact on the data points. They have to strategically plan to knowing what they presume the data points will be, which is a potential move towards recession in some areas of the world. And that, I mean, it's more complicated now, because you've got car manufacturers with steel and the American aluminum or aluminium, right? The vitamins. You've got those tariffs instantly just putting 10, 20K on the price of cars in the United States, just as one example, right? And how does any business survive that, right? And this is the thing. So there's a time to pay attention to the data, and it's not right now. It's in 3 months. So, very good point. Right, should we have a look at what Bitcoin's doing, mate? Should we do that?
Yes, please.
But I'm gonna yeah, there's loads of random stuff today. You're on fire on Thursdays. I'm not. So, right, let's have a look. Okay, fresh chart, fresh day. This is Bitcoin 2-hour chart. Now, in the roundup I did on Holoprime Crypto's YouTube channel, which is a new YouTube channel for everyone, for the YouTube for Holoprime Crypto. So if you haven't subscribed, get over there for additional content. I had multiple charts. I had 4 charts. 2 of them were giving me mildly bullish signals. 2 were giving me mildly bearish signals. And I think this chart probably sums them all up. Okay. So we have obviously this trend line on the 2-hour chart, which we haven't yet broken out of. There's different ways to draw this line. So that's why we have different charts. We've obviously broken above the 200 MA on the 1 day, but we are stuck below the 618 fib level, and we're stuck below this diagonal trend line. And we have this pattern, which is a simple channel, rising channel, which has a 70 to 80% chance of a break to the downside. But we're also sitting at the 0.5 fib level as well. So we've got interesting support here. We've got resistance here, but then we've got some bullish signals from the breakout of the 1 day. So what happens next is definitely going to be reflective of where we're going to be over the next few weeks. So really straightforward scenarios. If we can keep the 1 day, we can maybe just kind of have a bit of a squeeze, and then maybe just a blast above the 618 and just get into this area, maybe, and find our feet. That would be good, and that may happen. But because there is a bit of indecision, if we get a little bit of negative news, perhaps we're probably just going to have this, right, and maybe move down to this level and then maybe have a breakout. So right now we don't have a definitive direction. We have a bullish posture because we're intermediate time frame, and there's a lot of resistance overhead. So really, you know, for those people who are like waiting for Bitcoin to get going again, we need to get through this, and this to get back up to here, which is then will allow us to maybe attack these all-time highs. So yeah, difficult to tell you where we're going to go. I mean, Igor, any thoughts on this slightly confusing chart?
It's a beautiful chart because I know that a lot of people made mistake about Bitcoin because, okay, last week or 2 weeks, we started bullish. We are bullish now because overall, as I see the chart right now, we are still bearish before, as you said, just broke that resistance. But I have one question that I prepared for you. And I see that question of various places. I think last week I saw here, but I see around the internet that question, which is very important. For example, we break resistance right now, and the Bitcoin is bullish. And we know that Bitcoin is bullish. Now, what is the strategy if I want to buy some other cryptos that are not Bitcoin, but I look at Bitcoin as a father that after that every other cryptos will follow the trend in fundamental way, if I can do that. So what is the strategy? How traders should pick other crypto pair, other cryptos assets? So this is my question.
Yeah, a great question, a super great question. One we try and answer, but it's not a straightforward answer. So obviously, it really relates to this, which I think you've probably seen before, and it's obviously it determines what Bitcoin needs to do, or the combination of things which needs to happen in order for altcoins to move. Essentially, imagine this is a bit of an insight into the Bitcoin's the king of Bitcoin's head and how it thinks and processes, and the scenarios within the castle where everything is rosy or everything is bad. So typically speaking, if Bitcoin has a bullish posture and it's ranging, which this doesn't quite qualify, right? So a bullish posture and ranging would be maybe this in this area, right? We've broken out. We're definitely, you know, we're sitting pretty. The bottom looks like it might be in, and we're just cruising around here for a little bit. That scenario would allow potentially some altcoins to move, because Bitcoin would be considered to be in an uptrend or just sitting pretty. And when it's sitting pretty, traders aren't trading it, so they're looking for other things to trade. So there's a few scenarios. So if Bitcoin is a bullish posture, or it is increasing, then you have these couple of scenarios. So if Bitcoin is going up and then Bitcoin dominance is going down, which we'll talk about in a minute, that's the best case for altcoins. But we haven't quite got this scenario yet for Bitcoin. So everything's going to be very, very hesitant. So the combination of things right now is altcoins will be, this will have driven altcoins up a little bit, but then they're waiting for the next move to continue. Now, if it goes down here, the altcoins will reset again. So this is the area we really want to be in for the altcoins to move a little bit. But let's just see what Bitcoin dominance is doing, because this obviously is a barometer for the sentiment in the market. And I think you'll find a very clear difference between what Bitcoin dominance does when the market is here, the Bitcoin is here, and when it's broken out and it's here, or especially when it's above here. Because what that will mean is it will signal to investors that Bitcoin is now the bottom's in. We haven't had that confirmation yet. And then they will start simply entering their altcoin positions on the presumption that Bitcoin will pull the whole market up. But we still haven't got those additional signals yet. We've had the first signal last week, and now we need more. And if Bitcoin stays where it is now or heads lower, then this is what we could expect from Bitcoin dominance. And you can kind of see this starting to happen. We've got a little bit of a higher high here, and this is proportionally money leaving the altcoin market, and that's not what we want. But if Bitcoin does make it out here, that's the second kind of bullish signal since we broke on the 1 day, because we've cleared this system, essentially this pattern, and then we might see this coming down, which then altcoins will then continue to move on their way following. I mean, look at Ethereum. So this is, since Bitcoin has broken over the 1 day 200 MA, right? It's recovered a little bit, right? And it's back in this pattern, which is good for Ethereum. But we haven't yet had any more bullish moves from Bitcoin, and therefore Ethereum isn't moving up to the next level, right? And if Bitcoin rolls over now, this is what Ethereum will do. It will return back into this negative price discovery range, and it'll take time to recover. But if Bitcoin makes it out of this pattern over the next few days, what Ethereum will do is it will probably do this, right? And then we've moved up to the next level, and then these areas where buyers aren't showing up will start to be filled with potentially buyers coming in this zone to benefit from a move upwards and beyond. And then Bitcoin dominance will then move downwards, giving out of this pattern against probabilities, give the market an additional signal, and then people will start piling in to some of the other cryptos. And then that's the way to go. So a bit of a long-winded answer, but ultimately, for altcoins to start moving with consistency, we need to be from here to here. But if Bitcoin goes from here to here, they will then reset. And the coins and the tokens, which are like Ethereum, struggling to hold on to long-term support after a little bit of a recovery following the last few weeks, they will just reset again. And then we'll have to wait for a reversal pattern and then another breakout. I mean, that wasn't very concise, Igor, I'm sorry, but did that answer your question?
Yes, wonderful. It's a good thing because right now the crypto trader, the new crypto trader, should watch Bitcoin dominance, Ethereum, and now in the next step, there is a question. There are so many cryptos in the market. And I know a lot of traders. I'm not from that space, but I watch stories about that. So many of that, some small cryptos with a small price, just happens something with them. They just go up or something. Like how people should choose other cryptos, how to choose which asset to trade. So it's very similar to stocks. Which crypto I can choose for trading? Are there any not fundamentals, but some criteria that I can use when I need to choose the crypto, except the market cap? Which
so you're on fire with the questions, Igor. These are fantastic. I couldn't have created better questions myself. Yeah, so we're going to get into that. But I mean, the marketing answer is tune in on Ola Prime Cryptos to top altcoin picks every Tuesday or Wednesday, and there'll be a selection of potential trading setups for you to trade, because we've expanded the altcoins we provide now. But that's the marketing lingo going. But the proper answer is, and how I determine what those top altcoin picks is, well, you just have to look. There's a few little tips you can do, right? So just cutting through the mustard a little bit. You're trying to find coins or tokens that work, and Ola Prime Cryptos are now offer over 100. You can go to places like RSIHunter.com or whatever it's called, and you can type into it what assets in the crypto market are oversold, and you can specify exactly like the RSI level that you want, or ones which have been putting in gains to see which are recovering the most, and then you can load up those charts and those cryptos, and then you can start to plan them, to chart them, and see if there's any trading opportunities. So that's one methodology, by just looking at what's moving or what's oversold, and then hunting those things down using websites and so on, or using just coinmarketcap.com to just see what the top moves are and where the attention is. But ultimately, it's a little less sexy than that in reality. So I'm just going to go through some of the top altcoin picks from this week, which we were talking about. So this was one of them. This was WLD, and it was the trading analysis suggested that we've had a breakout into the upper range, and then buying the retest of this diagonal trend line would be a great place to enter. And of course, we are still hugging this diagonal line, and we're moving upwards. So if you had entered there, you got about a 10% so far. But I didn't like this particular setup because it wasn't. I wanted this moving average to be up here, as it was causing a bit of issues with risk management. Because if we had a breakdown, there's a lot of confusion about what would happen here, because we're losing this, would lose this support, it would turn into resistance. And even those people looking to enter on the 200 MA here, just on the 2 hour, would have got trapped between these two levels. So I didn't like this as much. So I had that one. I had move, which was essentially the retest entry, which was proposed, is coming into play. And I think I'm going to trade this myself, because we've got this moving average swooping in. It's the 4 hours. It's got more significance. And we've had a very strong breakout into this second range above, which means a lot of buyers are going to be trying to show up here. So it's a really good option. Compared to WLD, it's the better option. And then we've got ENA, which essentially we are a slightly different position. This would be an aggressive support buy around this area. We're just waiting. But for this, we need Bitcoin to come down, because we need Bitcoin to push the market down. So we've got a good entry with this. But this is manageable for me for risk management, because it's a hardcore kind of support buy. This is probably the better setup now, with a really good entry just approaching at the moment. But this one, in the end of the day, wasn't as good. So I had 3 setups I charted. And then I've got this as my top choice. This is my second choice. And then whichever hits first, which looks like it's going to be moved, I will then choose. So the answer is, hard work. But I think that's a good thing to maybe get into next week. We can talk about RSI Hunter a bit more, and how to use CoinMarketCap to find these tokens. But I think what we don't do is we don't read a tweet and then go and trade based on a tweet, like
Yeah.
someone promoting a project. I mean, we've all done it, right? But that's not
about that. I know, for example, when people trade equities, there is some similarity between the crypto and stocks, because at stocks we have the penny stocks with very small market cap, where just a few people can move them up or down and manipulate the price. I assume that we can have that in crypto market when we have some coins that with a small market cap. So do you have some filter to avoid low market cap cryptos?
Okay. That's again. God, this is so good. So many great questions. So let me talk about this in the context of long-term investments, because I think it's easy to answer the question that way. Obviously, on a basic level, whatever you're doing, low caps are more risk, high risk, because if Bitcoin puts in a 10% move, some low caps will put in a 50% move, right? Or even more, even 100% move, right? But if Bitcoin then dips 5%, they'll go down 50%. So you have to approach them very differently and trade them with that in mind. And the general rule is that if the lower cap you're trading, the more confluence you need, for sure, and you need the market conditions to be right with you. Whereas you can enter an Ethereum position, make a mistake, and it's so huge that any declines, aren't going to be too significant. But in terms of investments, so what I've been doing over the last 6 months or so has been planting seeds, and I'll obviously put less capital in the low caps, but they don't need as much capital to make life-changing money, because if you let's just say, I don't know, 1K USD maybe in a low cap, and it goes where it's supposed to go, this bull run, it'll 50x, right? Because it's a low cap, right? But wow, Ethereum is not going to 50x. So you need to put more capital in order to make gains from Ethereum, which might have more modest 4 or 5x gains. So you have to, the idea with my investments would be, I offset the risk of the low caps by investing in a few mid caps and maybe one high cap like Ethereum. So Ethereum is quite predictable. So if Bitcoin continues upwards, Ethereum will eventually follow, and it will give us some solid gains, which might cover my investment cost originally, right? So if I lose, if I've got 3 or 4 low caps and 2 of them get wiped off the map because of a hack or whatever, or because of bad price action or some bad news, then my investments are protected by the more solid and dependable high to mid caps. And all I need is one of my small low caps, like really small low caps, like 10 mil, something like that. Then all I need is one of them to go, and it makes me rich each cycle. But I have to approach it completely differently, because, especially when the market is the way it is at the moment, when we've had consistent, the altcoins going up and then resetting after every kind of bullish run up from Bitcoin, and the low caps, they just bleed. And a lot of them are now in negative price discovery, even the ones which are good use case. So there's a lot of risk involved, but that's probably how I would answer that question. But ultimately, that's why I say I don't really trade Bitcoin, because if Bitcoin puts in a 5% move, well, I want more than 5%. I want to trade something with like 10% of the market cap, which will then move much more significantly. So I look at Bitcoin, plan Bitcoin's next move, and then trade a mid to low cap to benefit from more percentage gains from that move Bitcoin facilitates. Does that kind of make sense?
Yes, it's beautiful, but I'm thinking the right timing to buy low cap cryptos, because is it to wait for the Bitcoin to start up, or maybe to do that earlier? What is the best strategy in that context?
Yeah, so definitely Bitcoin needs to be where you want it to be, right? For sure, yeah. Right? So we're in that area, right? So if we come down here, you'll start, obviously the floor really for this at the moment is around 73K, right? That's the ideal situation. But if we come down here, we're going to lose the 1 day again. So the scenarios we need to see now for altcoins is arguably this is going to trash the market again. This will reset some of the gains the altcoins have put in. So some low caps, an example, have started to recover and move out of negative price discovery, and then are waiting for Bitcoin to put in a bullish move to then print a reversal pattern. So ideally, if we get a break out of here from Bitcoin, then that would be potentially a good option to enter. Or if you're a bit more risk averse, you could wait till Bitcoin breaks into this range, maybe come up and then come down. And then as it enters resistance, you're looking to enter the sort of the lower caps on the altcoin market. And that's probably the best option to wait, because as we talked about with the money flow, it trickles down. So when Bitcoin is bullish, people start taking their profits from their bullish moves. So as Bitcoin ascends higher, maybe if it breaks all-time highs, those profits will start, and that momentum will start trickling down to Ethereum. We'll start seeing Ethereum put in more bullish moves. People looking at Ethereum as a barometer for the altcoin market will then get things like Solana and all the crypto OGs to move. Then people will take profits from those trades, and then they'll put them in the mid caps. And then if Bitcoin continues up like it does in a bull run for months and months and months, then the mid caps will then have trades which come out, and then you'll have profits taken from them, and then people will put them in the low caps, and the money just trickles down, and that is essential until everything is just going to the moon, and then the fervor gets a lot of media attention and everything goes. So to wait for Bitcoin to come up here, I don't think you're going to miss anything, because the market needs time for the money to trickle down. And the money's only going to start flowing properly when Bitcoin has at least got back into this area, and arguably when it's broken all-time highs. That's when people will feel confident to enter a more risky altcoin trade. But don't jump in now, I don't think necessarily, unless you've got a really good set. I mean, some things are going really well, like things like AI tokens have made a pretty solid recovery, and they're just waiting for Bitcoin's next move. But it's all about Bitcoin. It's all about Bitcoin. And you've got to think, what's the most bullish scenario for Bitcoin? What's going to attract people to the crypto market and tell them that the bottom's in? Well, it's going to be up here for sure, or when we break all-time highs. And then people will start investing in the market, hopefully. But we're still waiting for this. I can't believe I just got that chart up first time. Jannie would be so proud. This is what we're waiting for, right? So Bitcoin is the first barometer. This long-term Bitcoin dominance chart is the second, right? So this move following the US election, this was the cascade which begun, but then the cascade was brought to a halt because of the economic issues and the bearish conditions and all the worries and the fears and all of that kind of stuff, right? And then we're back up here again. So we need to see this cascade. So essentially, simply put, getting all of that nonsense I've just talked about, if you want to see when the best place is to enter an altcoin trade for this bull run and to try and get the bottom, you need to wait until this primary trend of Bitcoin dominance firmly enters a downtrend, which is very simply a lower low and a lower high. And then when traders see that, they'll start to enter, and then hopefully we'll get a cascade, and that's the bull market. So Bitcoin and this chart probably are what you want to watch. I think I need to work on my being more concise on Thursdays. Did that answer your question?
Beautiful. Your speech was so very educational. I need to say, because I think that a lot of people trade today using the tweets, and this is the really wrong approach. But in this way, it's very important to monitor multiple charts and to think a lot deeply and to concentrate. I think that for cryptos, there are a lot of work for preparation work. But I see and I know a few people that really earn a lot of money in crypto space. So just trading this low cap cryptos and investing money in the right way. So this is the really interesting market.
Yeah, I mean, it's the same principle in terms of, I mean, on a basic level with low caps, you just got to use less capital. That's it. Just use less capital, and definitely scale in. But this has been frustrating. This has been very frustrating, because this move was pretty much bang on with historical trends, and then unfortunately the chaos in the world has altered it, because this was the last bull run. and this is that's just money raining down. This is Binance Coin going from $12 to over 200, right? And Solana, just going to the moon with its market cap, putting in thousands of percent profits, and that's what we're waiting for. But you'll find at the moment, and what's been frustrating for traders is they've been trying to enter positions and they just keep resetting, and it's very, very frustrating. And this is kind of the problem at the moment. I've got a bit of news. I've just done a video which will be out a little bit later, but this isn't the news I was talking about. I'm sorry, I'm getting a bit confused. We'll do that later. But this is a setup which has come in today. This is Uni. This is available with Honor Prime Cryptos. So do you want to just kick off with this, Igor? I'm interested to give you
yes, please. Yes,
what you think.
Watch.
What do you think of the setup?
Here.
What are your thoughts just looking at this chart?
This is I don't know. I need more investigation on a multi-chart time frame just to figure out. But it looks like a bullish breakout.
Yeah, let's zoom in. Let's just see what's happening. So this is actually what we've been talking about, right? This is an example of how the altcoin market has been pushed into negative kind of price discovery. And I put looking for a bear trap because there's a lot of these happening. We're losing support because of the bearish bias at the moment, and then when Bitcoin puts in a move, we're recovering again. But just like Ethereum, if Bitcoin heads lower again now and doesn't continue its momentum, it's going to come back down, and this will take a long time to recover. And this is a good place to enter for a long altcoin position because we're below key support. So what we want is for Bitcoin essentially to propel this beyond this diagonal line and then come back down, and then that is your maybe entrance for a long trade, because obviously we're obviously very, very oversold. This is a great buying opportunity historically based on this. This is October 23, but this is worrisome, right? Because this could just roll over. So the idea is with this trade is that you firstly need to wait for bullish confirmation, right? So would ideally look, because this is a downtrend, right? And it's even though we've recovered this level, it's a bit worrisome that we came down here. So we want to see this Bitcoin's next move. We want it to push the market this way, and then that, where my green arrow is, would be your potential entrance. And you've got nice confluence with the horizontal trend line here as well, to give that. And then because we've had that bullish signal, then we've got a straight line of sight up until this level, right? And this is essentially the game. And then if you did that, that's going to be a 50%er potentially. So that'd be a midterm hold for a few weeks maybe. But this is we need to wait ultimately, because we're seeing a lot of these patterns and we're seeing a lot of these bear traps recovering. But you got to think of yourself, if Bitcoin comes down, I'm losing this, and we're coming back down here. And who's going to enter here? Because we're below support. So we need Bitcoin to come in more. And then this potential trade, depending on whatever your risk tolerance is, would be wait for this breakout, ideally maybe to the next level, and then come back down. And then that's your entrance, right? This lovely ascending diagonal line. And then you've got a bit of room to come up to here. And then obviously you've got resistance. And then that's the potential trade. But it's a waiting game, right, Igor?
Yes, we need to wait to see what will happen. But the patience is the most important thing in these situations. So we need to see that. And this is something that I really think about my US dollar, Japanese yen movement. So I wanted to enter before we broke the channel, but I waited. And I think that kind of patience is very good, because there is always chance you can lose, even you have a false breakout or something like that. So sometimes it's really this strategy to wait for a test, another pullback, and then to enter. It's a very good strategy, and of course aligned with the Michael strategy. L1 and L2. This is the way which makes some kind of distinction between patient and impatient traders.
Here's his W. Here it is. There it is. and then away you go. It does work. His strategy does work. So yeah, but I think this is the point people need to realize, not to treat the crypto assets as separate entities like stocks necessarily, because look at this pattern. Look at Ethereum. It's exactly the same move, right? And all of the market operates this way. Now, sure, you have got certain tokens, exchange tokens, and high use case things like render, FET, all that kind of stuff, AI stuff, which traders continually will be looking every time Bitcoin puts in a bullish move to have an entrance, because they want to get into those high use case cryptos, right? So they will move a little unnaturally compared to the rest of the market, because they're the hot coins and the hot tokens at the moment, right? But the majority of the market, for thousands of cryptos which are available, they will just follow what Bitcoin does, and they will just be mirrored almost exactly until something happens differently, which is why all of these things will move together. So when uni goes, other things will go as well, because guess what? Bitcoin's moving, and then the money flow's going in its favor. So anyone who comes up to me, and any of my students who would present a chart to me, the first question would be, well, this is great, thanks for the chart, but what's Bitcoin doing, right? Because that's ultimately the answer we need, which is why I'm constantly flipping around between these different charts, trying to figure out what the next move is. And with like ENA, my trading plan for ENA, if I'm going to enter at this support, requires Bitcoin to push the price action down. So for that trade, I want Bitcoin to come down here. So I want to use Bitcoin to push the price point to where I want it to be. And that's kind of the I keep using this term, the negotiation. I need to come up with a better term, but and I mean, any thoughts on that, Igor?
Yes, this is the right strategy. Technically, it's a very good strategy to always wait the price to come to your price level, not to chase. So wonderful.
So just speaking of, there's some news today about a token called INJ, which is offered on All Prime Cryptos, and I haven't looked at it yet. And I thought we could look at it together to see if we've got any unnatural price movement as a result. And the news was, let me just get my news thing from the thing of it. So Injective, INJ, has joined the US Pro Crypto Advocacy Group, the Blockchain Association, and Injective and Google have joined forces to accelerate Web3 infrastructure. So this is pretty serious news, because Injective now can influence policy decisions. So I haven't looked at the chart yet, but should we ever take a look and see what it's doing based on this news?
Yes.
Just because we're talking about obviously all these natural versus unnatural movement. So let's have a look. So it's a good barometer for the market, because in the space, when you've got news and then your token doesn't move, there's something not quite right. So let's have a look at INJ. Really, I don't think we'll spend much time with this, but let's just have a quick look. Yeah, look again. See, we're all at support, right? All these cryptos are at support. Very similar pattern compared to Ethereum. Same pattern with Uni. Very, very similar. Everything's following the same. But looking at this, not really much of anything from this following that news, is there?
Not too special.
No. So, and I think that is the crypto market, the altcoin market at the moment. It's like no one cares, right? Because we're not in a position fundamentally. So I didn't. This is why I didn't bring it up on the news today, because I was pretty much presuming it wasn't doing anything. But yeah, usually if you get news like that for a crypto, it will pump, right? It will do something like this. And this is a very sad state of affairs, I think, for the altcoin market, because really tremendous amount of news. And back in the day, a couple of years ago, this thing would have just pumped and gone to the moon. And it's not, because we just don't have the conditions. So I'm going to shut that down. But yeah, but this is what I wanted to show you. Now, I'm not an expert on this. I'm just really last few years been getting into it. But this is Bitcoin 4 hour with time-based fibs. Have you had any experience with those, Igor?
No, I didn't work with them.
So just to explain to people what they mean, and obviously let me just find my notes. Thanks for your patience. So yeah, time-based Fibonacci's, I'll just read this, refers to using Fibonacci ratios to predict potential price reversals or turning points based on elapsed time, and using vertical lines as opposed to horizontal lines for traditional fib retracement levels spaced across intervals along the time axis. And these lines are obviously drawn based from major highs to major lows, and that essentially are used to anticipate price changes. So I just got this really basic chart. This is just Bitcoin 4 hour, and this is the point of control for up here, right? So this is resistance. Now we are at, based on this move here, we are at a junction point at the moment this weekend, and based on these fibs, we're looking for a similar move that we had from this yellow box. Okay, and if we get that, then we're going to have potentially a move up to here. Right now, this is not something people should rush away from their computer now and go, oh well, the time-based fib says it's a good time to buy. No, when we're trying to no, when we try to make sense of Bitcoin, and we've been looking at multiple charts throughout the week, trying to figure out, you know, what is the bias, you know, where are we at, or getting mixed signals from all of these different charts, right? That's Bitcoin dominant, excuse me. So this is just another chart, another perspective. So if you were waiting for a move from Bitcoin, you could look at these time-based fibs and plot these time-based fibs, and you could think, right, we're expecting a move of some sort here. Is it going to be up? Is it going to be down? Let's wait and see. And then you can plan that, because if you're thinking of planning a trade and you're on it's yesterday or a few days ago, and you know this time-based fib is coming up, other people will see that, because this is basic TA in terms of, you know, price movements and how we use these Fibonacci levels. But it just gives you another perspective to consider when thinking about, are we going to see more downside from Bitcoin? Well, based on this, no. But then, I mean, we've also got fib spirals and all of these kind of crazy things, which some of my mentor used to use. But it just, I mean, this is obviously a lot of maths behind this, Igor, and you do a lot of algorithmic work. Do you see this as something which would be helpful in your market if you got used to it like I'm trying to?
I think it can be useful. So I just want to hear more about that. Just your thoughts technically.
Well, I mean, I'm just trying to catch up, because all my mentor used to throw stuff like this at me all the time, and I struggle to try and make sense of it. But this I've purposely made really, really simple to just, you know, this is essentially the determining factor, this move, and then what we're trying to catch is the next pivot point. And these pivot points can help us time Bitcoin's next move. And obviously, it's one of those things in the market where, you know, if everybody looks at something, then that thing impacts the market, right?
Yeah.
And it's one of those weird things where, you know, and because ultimately everyone needs to remember there are human beings, right? Programming bots. There are human beings behind this price movement at some point, right? There's algorithms and all kinds of things, but there's human beings behind it. And if human beings, for example, all look at the moon cycle, which they do for Bitcoin, right? I mean, I've got my moon cycle indicator, so let's put that on just for a laugh, right? So if everybody follows these moon cycles, right, one is bullish, one is bearish, then it will happen. It will make an impact in the market because they'll be using it as part of their trading plan. And the same with the fib levels. It's kind of like a self-fulfilling prophecy almost. And it's a little bit ridiculous concept if you think about it, but the same with the fibs. You know, how much you could argue that are the price movements in the market operating because of mathematics, or are the mathematics informing humans and then they're making decisions based on that, which is then moving the market, right? Do you understand the distinction, right?
Yes, I think this is second.
And it's like, it's a bit of it messes with your head. And the same with these time-based fibs. Just use it as an additional angle to look at, right, and to consider, and never just trade off any one thing. But it's something I wanted to bring through today, because the people watching these streams, I think it's important that every couple of weeks we bring something fresh to the table and how we look at the market, and give people extra tools to do that. But experiment people with time-based fibs. There's a lot of resources online about how to trade them. Maybe we'll do a training video, but I just wanted to bring this up because when you're trying to go back and forward from charts, and you're trying to figure out like because I mean, you look at Bitcoin 30-minute, right? This is more bullish when you look at it from this perspective, right? It's like Jannie showed us last week what was a perfect kind of uptrend, right? And this is looking like the same thing, right? Except when you look at these other charts, we're getting confusing signals, which is why I do like to have multiple charts with cleaner, more complex, so I can try and figure out what's going on. Because this looks bearish, but the 30-minute chart, which I can now probably can't find. Somebody's laughing at me somewhere. Yeah, I've lost it again. But yeah, here it is. But this looks like a straightforward uptrend. We're hacking through the fib levels and we're on our way up, right? So this can also give us an additional perspective. And if you look at the 30-minute chart again as well, it's like, look, I mean, this is a fully formed pattern which looks ready to go in either direction. And when look, it's coinciding with this time-based fib as well. So we might get a move over the weekend and we'll see what happens. But yeah, I mean, that's all I've got. I'm not an expert on it at all.
So I think this pattern right now that I have on screen, I watched that. It reminds me on a cup and handle pattern in technical analysis. So a little bit, which is a bullish continuation pattern. So I remember that a lot of people ask me which pattern for you is the best candlestick pattern. And I always say, for me, I like bullish, bearish, engulfing pattern, but to wait the next candle to make decision, not right after the engulfing pattern. And this cup and handle, because on long term, that can be very, very, very interesting. I have similar pattern for silver. It was one of my, I can say, investment trades that I ever had. It is my biggest trade in my life.
Oh, well, tell us more. Tell us more about that.
Yes. It looks like that. So it should be based on that pattern. The one little bit push downside, folds downside, break, and then push higher. Something like that.
Yeah.
So
yeah.
So I can show you. I have on my screen. I just found.
Yeah, let's do it. Let's do it. Cup and handles. We haven't talked about them.
How that looks like, just to see. This is the image that I drew. I hope that you will see soon.
I will tell you.
It will be, I hope.
All the anticipation.
Yes, this is the something like that. So this is.
Did you need reminding that it was a cup and handle?
This is like the picture. But my trade, for example, it's a trade for silver. And if you watch relative strength index, stock, MACD, whatever oscillator, whatever you watch, nothing special. But this pattern, if you watch from the 1973 up to date, for 50 years, look, you see cup pattern here. And I wanted to trade, but I didn't have I was wondering. It was I think 3 years ago. I wonder, should I enter? Should I not? What will happen here, etc. And then what's happened? I start to read about fundamentals related to the silver, and I just saw that silver plays a crucial role in the solar industry for the thermal conductivity. And in the silver, there is a photovoltaic cells, and which helps convert sunlight into electricity. And the catch of that cells are made from silver paste. And of course, I'm talking about this, and people think, why is that matter? It's matter because gold and silver people use for jewelry, and they're nothing special. You don't use for industry. Sometimes you can use for something, but it's expensive. You will never use for to create some things for your house to be from gold. But there is a thing: silver can be used in solar panels, and this is the catch of the industry, and that started just a couple years ago. And I read that in the paper, and I create the trade around the level 25. And right now it's a $34. So it's a
Nice.
one account. I have that trade. I still have it. It's 2 years, 3 years. And I just want, because in one day, this can go to $100, $150, because the silver will not be only for jewelry. It will be in the industry. So everything will change. So this is my perception for investing, for example. But I think that this multi-decades gap on the chart will show that investment opportunity. So
I have never traded a like a 10-year, like a decade cup and handle. I mean, you're on fire today, because I mean, you're talking about, you're trying to get an edge. You're trying to understand the asset you're trading, and like we're talking about that in the news with Inge, right? That would be a short-term equivalent of that. Like, it's partnering. It's going to have an influence with crypto going forward, but we're not seeing any movement. But trying to find that edge with whatever asset because that really makes sense. And I didn't even know that. I didn't know that. I mean, when I think about mirrors, now I know that, right? But it's that's cup and handles, right, guys? They pay the bills. I remember the last cup and handle. I love trading them, because what you have to appreciate when if you look at that yellow line on your chart, on your chart, Igor, that is obviously a resistance line, and when it becomes support, then it will flip, and then buyers will start to come in. However, when you have a cup and handle, and you can kind of see the handle where the rocket ship is, right? When you've got the cup and handle, when you break out from that neckline, you don't just have a basic support line breakout, right? Resistance line breakout. You have this huge pattern which has been forming usually for a few months, right? Maybe a year, right? And then buyers will really pay attention, right, to the breakout following the handle, because you've got the first attack of the resistance, and then you have the sellers taking back control, and then the handle is where the buyers start spooling up again. I want to say reload, but I don't want to take Michael's language. and then it breaks out. But then when it comes back down, all the buyers will enter, because it's been this huge pattern, this consolidation pattern, which is finally breaking out. And I did that exact same thing. The last cup and handle I traded was last year, and it was Fetch AI, and it broke out. It put in a perfect retest, and within 3 weeks, it was 100% up, right? Yeah. Great trade. But I mean, the truth of that trade was I got out at 100%, and then it went on to put in 1,000% gains. What can you do, right? But yeah, it's great. We should talk more about these patterns, because they're very helpful. But
yes, what I'm looking for, and I was really the huge impact was the movie that they talk about, a Big Short from 2015, about people who made huge profit because they bet against the whole world. And in that movie, there was a trader, Michael Burry. I don't know how to say the right way. In that movie, I think he was played by Christian Bale, actor, and he invested heavily in credit default swaps, and et cetera, et cetera. And what I watch now, he's very interesting from that movie, and I watch what he's doing right now. So I want what, because he will do the same thing from the 2015 Big Short in 2008. He will do again something extraordinary. And do you know what he's doing right now? He's buying water resources. So he's looking across the America whenever he because he calculate that in the future, in next 20, 30 years, If you have the water resource, you will be rich. It will be new oil.
Well, that's depressing. That's depressing. That's terrifying.
Yes, but he's a genius, I think, in some way. So I just monitor that all that things, and I find some right now some app where I can monitor all hedge funds, for example, when they invest, what are they doing, because there's so smart people in the world, and sometimes nobody listens them. So I just want to believe that they're smart people with smart ideas, and we need to hear that ideas.
Okay,
So
you just summed up the world crisis. You just summed it up. Stop listening to stupid people. I'm not saying who those people are. I'm probably one of them, but I'm like, yeah,
politicians are the stupid.
yeah, it's so difficult not to get political. It's yeah, it's. I mean, when I did watch that movie, of course. I thought for a minute you were asking about what Christian Bale was doing, and I'm thinking, well, he became Batman, so he clearly made a lot of money. So
yes. Yes, for sure. So, but that movie is excellent for people to see. There are a lot of strategies in trading, and this is the trading. The people that doing that are real traders, real people, and we can learn from them a lot. Even they do not trade on intraday level, but the same problem. They use the fundamentals. They try to find the solutions, and each of that 5 people in that movie have different strategy, to completely different look on the market, and all of them become the rich people. So it's very, very interesting way that we can use in our trading. Yes.
yeah, it's yeah. I mean, look, what we're essentially talking about is if you're a trader and you're looking for an edge, right? Think about where's crypto going to be, right? In the next, or whatever market, where is it going to be in the next 10 years, right? And if you can start to develop a picture of that, then you can start to maybe plan an edge. And it sounds so simple, but it's not. But like you were talking about silver, I mean, that was a really astute observation, and it sounds like it's going to serve you well. We've got a few questions. I think you've already answered. Is there? Hi, Andre. Great to see you. I think you've already answered. Tomorrow there's UK data, PCE. What do you expect from GBP USD? You want to add something to that, Igor?
Okay. I will just open.
Yeah, you answer, Andre, and I'll answer. Sahidi. Yeah.
Okay, so just to see, can we see the chart?
Yeah, it's coming.
Yes.
Yeah.
Yeah, so for tomorrow, I really expect retail sales for British pound dollar to be worse than expected. And I want to see a little pullback from British pound dollar down and find some great level to enter into the trade. On the other side, I don't expect nothing from the US dollar. I think even that this core PCA price index can be a little bit lower. And expectation is in the market that will be the lower. And I think that smart people, economists, made a little bit good forecast. We will see tomorrow based on some research that I created. I think the core PCAE price index will be a little bit worse than expected. Of course, I'm nobody, but just I prepare some kind of the plan for tomorrow, and I would like to find some interesting price level, low level to enter to buy British pound dollar, and I'm really watching some levels there. I can just share the screen just to talk a little bit about that, because the traders want to know what will happen tomorrow. Okay, just to see, can I be seen? Yes. So right now we are broke we are broke 61.8 retracement level. So we can finally say that we are really in the bullish mode. This bearish mode from the 1.3015 up to 1.2870 was a bearish move. It's a decent bearish move. It's 130 pips, actually 150 pips, which are really, really good bearish move for a bullish market structure. And what they want to see today, I think that we can reach this level, 1.3. It's not smart to sell. It's not smart to sell. Today, I will leave British pound dollar. I have a 70 pips profit. I don't want to trade anymore. And I think that could be very volatile, maybe some crazy moves here. I will just wait. What I want to see at least 15 minutes after the news, and to get the bad news for British pound dollar and to chase the low. So that low should be some level that we are watching a very long time. The interesting low levels are first at this level is good. We just share that level here. It's a moving average 50. It's around level 1.2920. This is the first good level to enter into the trade. The next is around 1.29, and the next one is actually here at 1.2890. So that 3 levels I will watch, and I will enter in buy order one of them. I want to see that. But like I say, sometimes I miss the trade, not by accident. I really want to see reaction on the level, because price needs to touch the level. Should be some kind of reaction, upside, up, down, something to happen before I enter into the trade. I don't like to make pending orders and to just buy or sell automatically, because sometimes, especially after the news, we can have really, really strong push upside or down. So for tomorrow, for British pound dollar, I would like to buy the deeps. I would like to buy somewhere. I will see where will be the pivot point area, which very, very important, and where will be the Asia low. Asia low, it's very important price too. I would like to see the Asia low as lower as it can, because I really want to catch nice move for tomorrow, and maybe to see the whole bullish day. But I just want to tell people tomorrow is Friday, and Friday can be very, very boring day for trading. So
you heard it here first, folks. It's Friday tomorrow. Okay, breaking. I think, Andre, you're not going to get a better answer than that. So, you're getting your money's worth.
So there is a question that I just saw right now for Nat. How can I avoid emotional trading? And I think that the last few sessions we talk a lot about that. So one of the tips to avoid emotional trading is, when you make money, when you make a good portion of money, stop to trade that day, because some crazy chemicals will appear in your brain, and after that push you higher and higher. You can risk and you can lose more money, like in casino. So sometimes when I make mistake or I make a huge profit, I stop trading. I wait for another day, another session at least. So this is very important to check and clear that bias in your head. So it's very, very important, especially when you make mistake and you don't make a profit. Like I said, I like little punishment. I cannot trade today anymore. Tomorrow or next session I will trade. And this is the excellent exercise for emotions in our body. So this is my humble opinion. So other people have different ways to control emotions.
I mean, yeah, I think Nat is also, thanks for the question, Nat. I think I completely agree, Igor, of course. But I think the second question from Nat is, what is a trading plan and why do you need one? you need a trading plan to avoid emotional trading. Is the answer, I suppose.
Yes, this is the answer of everything. Yes. Yes.
There's one. Nat, please keep going with the live streams, because we talk about this all the time in more detail. We're running a bit out of time here, but we always talking about trade planning, and it's important. So, but great question. Igor, do you mind if I just answer this question directed at me about? I'm currently looking at Blur. Is that okay?
Of course, please.
Do you think it's a good time to Blur? Just looking at my yeah. So yes, Blur is available on Holoprime Cryptos. Fantastic. Do you think it's a good time to invest? Should I hold off? I'm considering jumping in at 1039. Now let me share. I'll just quickly put that on a chart. Do you mind if I share my screen? Is that okay, Igor?
Yes, please.
Let's answer this question before we finish. Let's try and answer this, be as quick as we can. Okay, so I've just dumped this. This is Blur, US dollar daily chart. Always start at a daily. Now, your proposed entry is 1039. Okay. Now, firstly, what I want to point out is we are in negative price discovery, right? We have put in an all-time low here. So this should be a warning sign. And I would consider this line to be the proper support line, which we need to be above for bullish context. So obvious trade here is you need to wait for a recovery and then try and enter here, right? But what you're trying to do with entering here, I see what you're thinking, right? I see what you're thinking. I think we both do. Obviously, we're coming up here, and this seems like a logical flaw based on this kind of this area here. It's a bit of support for sure, right? I mean, I maybe I would at least, if I was thinking of doing it, coming in at 90956, but we haven't got enough confluence. There's not enough confluence. We're in negative price discovery. You've got to ask yourself, how many buyers are going to show up here for this move? We're in a downtrend. We're in negative price discovery. High risk trade to come in here. The simple answer is wait for a bullish confirmation, which would give you a higher high, a change of character, and then look to enter what has been long-term support. I mean, do you have a different take, Igor?
Beautiful. This is the beautiful answer, because I think that this level that you just driven in the chart, this is the way how traders should trade, because in this way you will have a decent amount of peeps that you can put the stop loss. Because if you enter right now and put to the previous low, it's not safe enough. In this way, you will be much safer if the price breaks above this white line. So beautiful, really beautiful.
Yeah, that's the trade, and this is what we're talking about with the cryptos at the moment. We're not in a good position. A lot of these, not particularly great use case tokens. It's a waiting game. Obviously, people have to front run this, right, in order to push it upwards. But I'm not sure I'm recommending anyone should be a guinea pig here, because if you got to look at what Blur's doing, right? So when Bitcoin was breaking all-time highs, it was up here, and then November it was up here. It's a weakening trend, right? So we need something before entering this particular coin or token. But great question. Anything? And you want to have the last word, Igor?
I just want to ask all people, please ask the questions and setups and everything, because we are here to help you, to give some opinion, to discuss about this, because more minds, more people, more different opinions can really help all traders. And even I so learn from Paul, from Michael, from Jannie, from all these traders. So this is the precious time. Yes.
Yeah, likewise. It's been what we've been the idea behind these sessions, is you want to have us disagree from time to time, because that will give you a broader perspective of the market. So I think me and you share a relatively similar trading philosophy, and that's fantastic. But we also want to have some sessions where we're dealing with people who approach the market very differently, because then you can take what you like from me, you can take what you like from Igor, or you can you like Michael's approach, or you like Jannie's approach, or Howard's approach, or Bruce. All of these people, they're all fantastic, and you're all different types of traders. So you might be a wannabe clone of Igor, right? And then everything he says just works for you, right? And you might hate everything I do, but then other people might be listen to me, and this is where it's at. So yeah, please keep the questions coming, and don't forget to check out the new Honor Prime Crypto's YouTube channel, as we have special coverage throughout the week. And obviously, Igor, you are around on the live streams all of the time, owning it. So great session, bud. Great to see you. Great Thursday. You've cheered me up. You've made my Thursday a bit better.
I wish you a great day, Paul.
Take care, everyone. Thanks, Igor.
Bye-bye.
Hello, everyone.
Sam, how are you doing, man? How's it going?
I'm doing
Michael,
good.
good to see you guys again.
Hey.
How you both doing?
Hey, what's up?
Great.
Absolutely awesome.
Great, man. Yeah.
Awesome.
I don't know if you traded today. I typically stay away
did.
after a big move. You did?
I did, yeah. I got lucky though. I mean, I did not expect this random downward push we got later. I'm assuming it was the same on NASDAQ.
Yeah, it's basically like a doji forming day. If you look at the daily time frame, that's typically I just like that's just in my experience. But you have a very big down day on the NASDAQ, specifically the NASDAQ. I'm not sure if you find the same on the S&P 500. The day after is a bit messy. It's typically like a doji forming day or just a small, definitely a smaller day. Not always, but that's just my experience. So, but Michael, you could probably join me on this conversation. Sorry, Sam, but
that's all right. I'll just be quiet and sit. No,
the pound US dollar. Oh man, the pound US dollar. I've been waiting for that one for a number of days. It was, yes. So we've identified, let me just show the screen. You can see my screen, right?
Yeah.
So we identified these levels were on Monday already, I think, maybe Tuesday, I don't know, maybe Tuesday. But we were like in the middle of this range. So we identified potential pullback areas. The first one was this low here, which is the low of the daily range. So if I go to the daily time frame, you'll see that we got the pullback, and I drew the FIP levels to get some sort of idea of what are the potential pullback levels. So that was the purpose of the FIP levels, and also I showed you the ATR that we've maxed out there, so we can potentially expect a pullback to those levels. But what happened was it did pull back, but it just missed that previous low. But on the price action itself, it did make a beautiful hammer formation. The only problem is, man, this hammer formed between midnight and 4 o'clock this morning, my local time. And I mean, I'm not staying up for that. I'm long past those days. Long past those days. I'm not staying up for that. So this was the 4 o'clock to 8 o'clock candle this morning, my local time. So when I woke up, it kind of already pulled back significantly. So, I mean, so at this point, it's not really worth getting in there with a stop loss below there, because now you really kind of, I mean, because the next target would be this high. And then hopefully it will break out and then retest and so on. You know the story. But when that happened, I'm like, okay, so if you miss the ideal entry, you can still intraday trade it, right? So you can still go to smaller time frames and so on. I did catch a trade at least. I didn't record the trade, but I did take a screenshot. That's good enough, right?
Exactly, that's good enough.
Right. Absolutely. So that was my entry. That was just before the candle closed, actually. But that was good enough. It was just like literally a few seconds. I'm like, yeah, that's really good because it's engulfing that previous candle, and it's a pullback after this breakout. Now this is the news breakout, the GDP news breakout. So if it wasn't going to pull back, then whatever. But it did pull back and right into this range, and then it pulled back, or it moved back up to the upside. So even when you do miss the ideal entry, which is at the bottom, you still have like a bias, right? And that was obviously you want to see how price behaves at one of these key levels that you've identified. So just to go back, because this is now in hindsight, but if this just crashed through that level, then you pay attention to the next level and see how price behaves there, right? Is it finding support? Can you see it like it's moving away from there? Then that would be your the level that you want to trade off. If it crashes through there, you focus on the next level. So it's always a good idea to have several levels, and then at a point where you feel like, I think this is completely gone too far now, especially when it crashes here. to the 61.8 below that, then it will probably, the picture may look different. But in this particular case, it found very strong because there were two beautiful touches here. That was the pullback, and then it came and it traded slightly below that low and traded off. Beautiful, right? That's a beautiful support level. But this last one kind of traded slightly above. But again, you can look at price action. In this case, again, that beautiful hammer formation there. And yeah, I don't know if Andre, I'm not sure if you're watching. I hope you I know you were watching the pound US dollar as well. But yeah, if you miss that ideal entry, you still have the bias of long, so you can still go to smaller time frames and look for pullbacks, breakouts and pullbacks and that kind of thing, and get similar risk reward ratios.
Yeah.
So it's not the end of the world. Now, I think from this point, we just bang in the middle of the range. It'll be interesting to see when I wake up tomorrow morning if it's gone another 100 pips up. I'll tell you, that has happened so many times. No, but
set up in Asia, didn't it?
Which is just, I mean, the pound US dollar, you would expect it to kind of set up during the London session,
right?
But it moved like 40, 50 pips already before the London Open. So like, man. So it's,
but
again,
that's part of trading, isn't it? I mean,
it is. Sometimes they're so sneaky. So sneaky.
But I think the point is it's not like that's it, it's over. The reason why I didn't want to get in here is when it around the London Open is because I was well aware of this GDP numbers coming out.
Yeah.
And I'm like, it's probably best to just wait for that to get out of the way and see how that reacts. Because it already moved quite a bit. So, this trade kind of made most sense. So still got a trade. It probably would have been, because this is the 15-minute time frame, probably a very similar move. If you look at, actually, this is probably a little bit more, right? If you had to enter here, let's have a look here. And then, you probably target, say, this high here, that latest swing, that latest pivot. So, but the stop loss is much wider. The pips you take is higher. But if you take the same dollar risk or percentage risk, it probably works out more or less the same. So, nothing lost, no love lost from my side for the pound US dollar. Still love the spare. Yes. But tomorrow is Friday. Are there any news events tomorrow? I don't even know. I don't think so.
We got 8:30 news.
We got the how many new T-shirts have they sold? Data, right? That one. And then, this final GDP Q on Q as well. Why is it marked as a medium impact news event? Okay, and that's pretty much it. Oh no, 2:30 GDP. Oh, that's CAD. We got core PCE price index. That's at 2:30. Okay, so we do have some news tomorrow. Yeah, we'll see what happens there.
Yeah.
But for now, I'll just see what the price actually looks like tomorrow. But the bias, I think, from this point is definitely long because it did find strong support and it's pushing up. Right. Yeah, and then I just quickly want to look at this Bitcoin chart. So we're still in this much broader downtrend with this channel trading to the upside, but it's now finding this is like a correction channel. It could potentially break out, but we're still in the correction channel and we're still within this downtrend. So currently we're finding this resistance at the 61.8, which is obviously a significant resistance area. But this could set up for something very interesting, because if you look at this leg up, and if this can hold, if this can like just continue to range, and then give you a break.
What time frame is that? Sorry,
this is the 4-hour time frame.
4 hour. Oh, okay.
Yeah. So as long as this doesn't like break lower, because that's gonna. I mean, this is another. Well, let me just so many lines here, man. Okay, so this line I drew here is also a very strong support level for me because it's the monthly open.
Right.
This is the monthly open. And if you look at the price action here, look at that bounce off, finds resistance there, bounces off. There broke through, came right back to that level, consolidate there, bounce back off. So this to me would be a really strong support level. So there are like those are the two. There are actually three scenarios. It can continue to range and then break out. That would be great, because then I think you can expect Bitcoin to potentially set up for something nice. And if you look at the monthly time frame, see that's the line there. You see that's the monthly open. So if I go to the 1 hour time frame, that's the level there. Okay. So that's just where I got that level from. But the monthly time frame, that's a very strong bullish candle. That is a bullish candle. So you can at least expect it to trade into this wick.
Yeah.
Right. So, but it could pull back. There's obviously some time left. So we've got a few hours left today, and then tomorrow, the weekend, and then Monday. So a lot can, every day, 24 new 1 hour candles gets added to the chart. So the picture keeps changing, but for now, I think this looks pretty bullish. But this is where the multiple time frame analysis is so valuable. On the 4 hour, you can see that you're in that channel, and again, if we can just hold that, if it breaks, then this will be the next significant level, and then just focus on how price behaves there.
Yeah.
But as it is, you should not touch Bitcoin. You should not be in any trade right now. Not long, not short, nothing. The picture, this is how you come up with some sort of trading plan. You just look at the different scenarios. Where are you right now? Where are the key levels? And that it's not a prediction. It's not a prediction. It's just what are the scenarios that can play out next? And what would make for an interesting, what would, if this breaks out, then definitely. Because you got these two touches here. It didn't quite touch the line there, but I mean, this is not an exact science. You can see it did make a higher high, right? And it's pulling back, but it's pulling back, and it's not really, it's almost like a FIP level. This is you get a FIP level from the high to the low, but you're also getting a FIP level from, I'm pretty sure. Let's have a look. Why don't we have a look?
50%, I'll say.
Yeah, let's have a quick. Oh, what time? Which one? Okay, it's the 4 hour. 4 hour time frame. Okay, there. So you can draw. You see, this is what I call, support resistance levels. You get the static and the dynamic support resistance levels. Static is just your horizontal lines, and dynamic is your moving averages. But there's a third category, and that is discretional support and resistance levels. And those are your triangles that you draw, because some people will draw FIB levels from here. Okay, the next person will come and draw the FIB levels from here.
Yeah.
So this is a discretionary, or this is what's the word? Discretional support resistance levels.
More of an area.
It's more, because it's not everybody will draw the same levels. If you compare that to, say, the pound US dollar, everybody's going to draw that support level at exactly the same line, right?
Yeah.
It's static, but when it comes to the other levels, it's a bit up to the individual, I suppose. But anyway, so we are hitting the 50 around the 61.8. Again, it's not an exact science, but if we can just hold that, I think, if it can break out of that to the upside, because this is a consolidation. Where's that damn chart? Yeah, bloody chart. So but anyway, that's my take on Bitcoin. I don't know what you guys think about that. If you want to add something.
Yeah, I mean,
actually, I had took something on Bitcoin on Tuesday. A small piece, like a intraday trade, but it was long. It was in essence through my exact setup.
Oh, you mean number 4? On Monday or?
This was Tuesday. I took it on Tuesday.
Oh, on Tuesday. Oh, this one, yeah.
Yeah, it was small. Let me show my charts. I'll show you where I grabbed it at.
Yeah.
It has to be over beautiful bounce right up there. Let's see. It'll be interesting to see. Let me stop my scan. Sadly, I have to stop my.
Let's see when we grab this. I'll do GU next, but on Bitcoin, where were we? Yep. So this small piece here, right? Like I always draw my same old, right? Like what I'm actually looking for, so I can tell where I am in this cycle. Right, my market structure. And of course, I'm looking for this right here, right? This is that exact level, right? So when I see this 5,200 cross, these two EMAs here, I know I'm automatically tell I'm in level 2, right? So I'm looking for W's off this 200 EMA, right? So this is the first move, right? As I mentioned, this happened on Sunday, and I don't trade Sundays, so this was the first move. Oops, let me make this green so we know we bought it. Yep, so right after this move, after the W, and it runs up, so you can kind of imagine, I didn't take this move, because that's where that is in essence. It's the next move where this actually bounced at, right? And my confirmation candle is when price closes above this 13 EMA. So this exact candle right here, right? Boom. This is a super small trade. I think I didn't even make much off this because it was the distance was only from here to here, right? To the 800 EMA was my target zone, and it barely nicked it, right? So nice little 1.5%. So I took this literally on Tuesday, right? This Tuesday. Yeah, this was the 25th. 25th? Yeah, that was Tuesday. So yeah, this was my super small move on Bitcoin on Tuesday. But the cool thing about it is, like I always mention, once I can tell where I am, right? Kind of how you mentioned earlier today too, Jannie, like it's just because you might have missed the first move, this would have been the ideal move, right? This W structure, once it's closed, you got a nice run up. Right, and then this small bounce going back up, which would be this move here, right? So just knowing that little piece, you can kind of tell where you are in the cycle. But obviously, this kind of faded on out. We kind of trapped between this 200 EMA and this 800 EMA. It's just kind of doing this nice little rangy thing here. Yeah, not too much for me. Like I would be leaving this alone right about now. Because it's not really long for me, it's not really short. It's just kind of in this range here. But something else that I also had too was that kind of gave me some extra confluence is the fact that my market baseline has went above the static, right? And then when I actually took this, it still was above the static line. So this was straight long for me, right on this entry candle right here. So
yeah, it's also that's a bounce. I think that's the same bounce. If you look at the what time frame is that? The 1 hour?
Yeah, it's the 1 hour.
Yeah. Okay. Nothing. I didn't want to say anything. Okay. Okay.
Yeah,
so, but what's your take on like what how do you read based on because I know we all trade very different. But like based on your strategy, is this something you're interested right now in any particular direction? Not really. No.
This is stuck. Like for me, it's stuck between this 800 EMA and it's stuck between this 200. I will be leaving this alone for a minute, but if I kick it up to the 4-hour chart, can kind of try to get a little bit more idea. And like, yeah, same thing. Look how this is trapped in between these two EMAs here. Like this isn't really anything. I would much rather see, oops, let me take this off. I would much rather see it break out of this zone higher first, right? Like we got this nice 1350 cross. I want to see this run up here, right? And then bounce off this area here and then go long. And I'll be interested in the move here, But for now, this is just caught in between these two EMAs. And then even then, if I was to take this, the way this was set up, I would need my 200 and my 50 to cross at a nice, decent area too. I wouldn't want to take this when I'm still stuck between these two EMAs. It just wouldn't really work out. It would end up ranging for so long, and I would end up holding the trade for so long that it wouldn't make any sense. Right. So I would definitely want it to close above like this 200 EMA first to kind of give me some room to like run. Right. Because from there, we got plenty of room. There's nothing here from there kind of stopping it from just continuously to run. But right now, seeing this above the 800 EMA, but below the 200, this thing could almost do it at once, like in here. Right?
Yeah.
It can just mace around for a long time. I don't want to be in that at all. I want it to break out of this structure, right? Something like this, and then bouncing and then go back on. And I'll be interested in this here. For now, this is nothing though. Not even on short trade bias.
Makes sense, yeah.
Well, Andre is asking a question. Is it possible to use a pullback 1.286?
I think
assume you're talking about the pound US dollar, right?
Yeah.
I mean, never say never. Well, sorry, Michael. I'll just give my take quickly, and that's well, first, never say never, but I think probability-wise, I think the probability is pretty low. You had three. You had three pretty strong.
2860.
Yeah, that's basically where it bounced off, roughly, slightly higher.
Whoa, yeah, that's pretty far.
Yeah, because I think you had three really strong touches there.
Yeah, that's pretty far for me, right? So
yeah,
for me, I would be looking for something. Yeah, like like he just said, don't say never, but this is pretty low, right? Like this would have to come way below. We got this touch, right? We got this touch over here around this below. It hasn't broken that area. We got this kind of right here, hasn't broken below that area. This is the last real time that it kind of did break below that. But yeah, I don't really see that happening again. I will see something like this. My 5,200 is just now about to cross. This will more than likely run up like this, bounce off, and then continue to go. And I'll be interested in the move here. Before they come all the way back down here, I don't really see that happening. Not the 2860. I think it's a lot of trap volume, like below this number here, maybe 2875. So you really don't want to go below that number, right? So I don't really see it going that low.
But what you can look at, Andre, just to give to have some sort of guidance. If you look at the 1 hour time frame, it's a pretty steep kind of angle it's been trading today. So and we all know that doesn't it never continues in a straight line. So you can expect a pullback. So you can just take the lowest point of today and then the highest point of today, and just draw FIB levels there to get some idea of where it can potentially pull back, and then get interested at the 50 and the 61% FIB level retracement on that move, because those will be pretty strong support levels. Because at the moment there's no clear, actually, except for if you look at, Michael, do you mind if I just quickly share my screen? You can take over in a minute.
Go right ahead.
Thanks, man. So yeah. So what I am saying is this is the steep, and I'm not sure if let me just zoom in there. Maybe the color of the candles don't look very good on but anyway. So this is obviously the low that literally 1 o'clock this morning, my time. And you had this pretty steep, obviously there was a news event and so on. You have this pretty steep uptrend, but there's always a correction in any like steep move. So your job is now to identify the potential areas. So the 50 would be of interest. The 61.8 would be of interest. Okay. And then you need to just identify all the levels. So those are the levels. So it will be around 1.29311, something like that. Not to the pip, but that area. And then I think a stronger support would be at 1.29167. That would be a stronger support, yeah. Definitely a stronger support. You can see that the side was consolidation, and then prior to the news, and then that breakout. So those would be levels, not the 1.286. That's too low. If your bias is long, and the bias is long, but in the short term, the bias was short because we wanted it to pull back. Does that make sense? So it's like what's your bias? Well, what time frame are you talking about? 15-minute, 1 hour, daily? They all vary. So, like for example, Bitcoin, the short-term bias might be long, but really the overall bias might be either neutral or short or long or whatever.
Yeah.
So the long-term bias is long, but when we were trading over here, the bias was short. Okay, to go back to one of these strong support areas, and then once you do get there, your bias changed to long. Yeah, because the bias on the monthly or the overall trend on the monthly and the weekly is very strong to the upside. Okay, so yeah, I'm not sure if that helps, but that would be key levels to focus on. But I wouldn't go past this high for now. Depends on like how long you want to keep the trade for. If you're like a longer term trader, maybe you can keep it open for the whole of next month. I'm not that type of trader, so I can't help you. I can't help you on that one. But those were the levels. Yeah.
Interesting.
So anyway. Okay. Sorry, Michael, or Sam, or
no, that was pretty much it.
Yeah. All right. Awesome. I will jump in then. Okay. Share screen. My computer's very slow lately. Not entirely sure why, but we'll pop that up. Let me know if you see the charts.
Yeah, we can see it now.
Yes.
Cool. So, yeah, crazy day today, right? I had a bullish bias when we got down to these kind of lows just because of this massive gap we had, right? Back in basically over the weekend, right? So beginning of the week, we had this lovely gap. So I was expecting once that gap is filled, some kind of push up, which we did get. It got filled, and then that's when. But I was still like in the last. I can't remember if you remember, Jannie, but on the last session I was with you, I had a very strong bearish bias around here. So we have started pushing down, which was good. But then around this area, I would start changing to bullish again, right? As soon as that gap is filled. But I was still a bit like, I don't really want to be buying right near here. Do you know what I mean? Because it's been so strong, the sell pressure. It's a bit risky to enter here. So I kind of waited for pretty much this whole candle, right? And I finally got in when it retested this wick here, when it came back into this gap in volume. And then I got in for a buy, and I do have it recorded. But yeah, I did not expect this push down again. I genuinely, once we broke this area, I thought we're going up to here. I did not expect this push down. Everything that's happening now, I have no idea now. Like, do you know what I mean? I'm kind of at a point where I'm like, I actually have no clue what could happen next. Like, that was very unexpected for me. So I'm glad I got that trade in early, because I would have been like, if I didn't catch that trade, I would have started buying like around here. So I would have had a very bad time. So I got lucky in that respect, that I got my trade nice and early and it was right. And that was it, because otherwise, yeah, that would have caught me out. This whole bearish move down, like I'm looking at the volume and stuff just out of interest. And I don't know, like it seems very, what's the word? Indecisive. Do you know what I mean?
Mm-hmm. Yeah.
And I think, like you said, it was like a doji for the daily chart, right? Let's go on the 4 hour. The 4 hour looks pretty normal, but let's go on to the daily. Yeah, it's pretty much just no idea, right? Open and close is almost the same. So, yeah, and I could tell that today. Like that was a very, very weird set of circumstances.
Yeah, but like you can stay on that, Charles. Sorry, Sam. Like,
yeah, of course,
of course. Look, is that the if you can go back to the daily time frame?
Yes. There we are.
So, oh wow.
Do you want me to remove all the drawings? Because
I'm definitely buying there. I'm buying there. Definitely.
Yeah.
Oh, there we go. Okay, so if you look at, I'm not sure if you can make the candles a little bit smaller, so we can see the chart.
It's a real mess.
It's okay. It's okay. But what I want to point out is if you look at any, most of the time, I know there was that massive sell-off that started on, what was the date? On the 20th. The 20th of Feb, that was an exception.
Oh.
That's when the big sell-off started right at the top
of the
NASDAQ.
Okay, yeah.
But in most other cases, if you look at a big dropping or a big size down candle, look at the next day. Look at what the next day looks like. It's always like most of the time, not always. I know.
Yeah, you're right. Yeah.
The next day is a That's why I didn't trade today, because I wonder what would have. I could probably have a look, but the next day is always messy.
Mm-hmm.
It's always like it looks it's gonna do that. Whoa, no, opposite side.
Right. They hit you with the gotcha.
Yeah, so when you get like a really strong day, when you go down, the next day I don't trade.
Yeah,
because I that was just based on the trading journal. Like, why do I keep losing money here? Like the previous day was so great. Like, what's wrong with me? And like, okay, actually, if you look, apart from everything that's wrong with me, there are additional factors. That is that. That typically is that's the case if you look at the chart. Big drop, next day it's like a doji candle or like an inside candle, and then you look at the smaller time frames and it's a messy day. Sam, you've got a question there.
I do. Can you read it out so I can?
He's asking if there's institutional buying GBP at 1.285.
Okay, I'll have a look. All right, let's go on to the pound. I don't know what 1.285 will be on the futures chart. So, Jannie, if you could kind of point me roughly in the direction of where, because the numbers are different, right? So...
Okay. Yeah, 1.285 will be, whoa. Okay, go to the, I'll just make it easy. Go to the 4 hour time frame.
Yep.
And that's oh man. Okay, that's that. It's okay. Your chart. I can't really see your charts with all that.
Yeah, go down.
Your chart's got a lot of jewelry on. Okay, there we go.
Cleaned it up. Here we go.
Okay, so basically, I'll give you the date: the 3rd of March.
3rd of
basically
March.
Basically the beginning of the month. That's 1 point. Oh no! What am I doing? That's wrong. That's 1.25. 1.285 is like okay.
Oh, okay.
Yeah. That's what I'm like. Just go down. You went too far off.
Okay, basically 1.285 is basically just below where we started to move up today.
So literally below, right?
A little bit lower, yeah. 1.285 is.
Okay, it's actually not that different. 1.26 something here on the. Okay, that's cool. All right. Let me put all my jewelry back on. Boom. So,
yeah.
So the last time I analyzed it, I think it was I don't know, when was the last time I analyzed it? Quite a few days ago with Howard. My bias was we're going to reject around here. And I drew these black lines and I said, if anywhere, like it will probably be one of these areas. And then we're going to go up eventually to here. And my bias is still pretty much the same. Do I think we'll have a pullback? Let's have a look. Let me look at institutional activity. That's what you wanted to know, right? Very true. All right, we're going to drop down on the footprint. get a bit of clarity. So at I mean, that was pretty much near the beginning of the day. So volume wise, you're not going to really see anything. Yeah, when you can ignore the bigger numbers just between, you know, when the market's about to close. That's just people exiting, right? So that's no one freshly buying. And the numbers are going to be pretty much dead all the way until at least, you know, London opens. So if we have a look, I'll be able to point out any institutional activity, hopefully. I'm not seeing anything too. There we go. I mean, someone did something interesting here. They were selling 600 contracts, tried to sell again 300, but these are people getting trapped, right? So that's actually a perfect, when there's a lot of money, when someone's putting money in the wrong direction, essentially, especially, you know, big numbers, and it's definitely not going in their direction, you can kind of be sure that this area is probably not, they're not going to come back to this area anytime soon, right? They want to keep those people trapped. So yeah, you can see how it got close to it. It would never go back into that area, right? Especially when you see a nice trap. That's why a trap setup is lovely. Like, it got close, didn't come back. I'm not saying it could never, like tomorrow, it can't come back there. Tomorrow's a new day. It might come back there tomorrow. Who knows? But at least for the day, like if I was trading it on the day, I would have. And again, you know, we're getting a lot of people trying to sell actually, but it's just not working out for them, right?
Right.
It really isn't. It really isn't working out for them. They're not having a good day. You know, like right at the worst point where you could possibly sell, they're selling. And yeah, that's usually a good sign that the market's going to keep pushing up. I mean, we definitely had whoa, what the hell happened there? Somehow, there we go, Control Z. Yeah, definitely had a bit of institutional activity on these wicks here. Very even, similar numbers right here. So that's always interesting. People
nearly
buying.
All the same, crazy enough, 170.
Exactly. Those are like layered iceberg orders being executed. So, or it could be people's people getting out, getting wicked out. And if there's any obvious structure nearby, yeah, actually no, I think that was from the high of this from yesterday, or not yesterday, was it? No, 2 days ago. I think there was a lot of pending orders popped up there, and potentially, I mean, just based on the structure, it looks like people will get basically got out. But yeah, I'm not seeing anything too concrete. We do have a lot of heavy selling coming in. What time was that? About 2 hours ago. But again, they're not really doing that much damage in the market. I mean, I would say this is pretty sideways.
For sure.
So I wouldn't, I don't know, I wouldn't want to sell. I do think there will be a retracement, like Jannie said, it kind of has to be at some point, right? We've had quite, oh no, that's the S&P. What am I doing? Back to here. Let me look on the candlesticks. Just sometimes it's a bit easier to spot if there's any gaps in volumes or anything like that. There's only one clear gap in volume right here, but it's a minor one. And that kind of just works out of the standard structure, right, of the market. So I wouldn't put too much emphasis on that.
Yeah.
Yeah, I think we're going up. I don't think I would be. I don't want to say something and then it'd be completely wrong, and then someone, I don't know, put money on the line and be like, Sam, you made me lose money. But,
yeah. Well, the thing is, it's again a case of like, just play it out in your head. Like, what are the possible scenarios here? Okay, so currently you are actually in a range.
Yeah.
Like if you look at the 4 hour time frame, maybe even the 1 hour time frame. 4 hours probably more clear. If you look at that, you are in that it's the 4 hour time frame, but you are in a range, okay? But you just bounced off the low of that range. You're still in the range though, right? So the next resistance area is the top of the range.
Yeah.
Okay. So and then from that point, it could very well come all the way back down and form a double top. That's one of the scenarios. So, but you can't look 3-4 days into the future. You just kind of have to take it day by day, and you can see that there are different scenarios that can potentially play out, but you're gonna have to predictions is not the right word. It's scenarios. What are the
you got to?
scenarios?
I always say you got to create that if then scenario, like constantly in your head. Like you said, play it out in your head. Create a few different scenarios, if then scenarios.
Yes. So like this, the pound US dollar was a perfect example. If it does come down to the range low and it rejects, then that's you long, right? And then if it does go to the top end of the range, then you're gonna have to look at price action. It's gonna show you, this is bearish. It's gonna come down, and then you go with what's already busy unfolding in front of you. You don't try to predict. Like 1.285 is not impossible, but at this stage, we're right back in the middle of the range. So now you're just going to look at what you have now, and that's why I say, right now, it's you got to look at the price action. We've made quite a steep little, like a straight 45. Well, that's probably 60-degree angle, whatever that is. So you're going to expect a pullback. So that's a scenario. Okay, you're going to have a pullback, and now you can draw your flip levels as an example for potential rejection, and then the price action will tell you, you can expect another long. Your target will be the top end of the range. I don't know if that makes sense, but that's you kind of deal with what's happening right now.
No, absolutely.
To say that it will go back to like your buyer at 85. It could have changed, right? Like we could now be in a bearish trend. You don't want to buy at 85, and the whole momentum and bias has changed. You're getting stopped out right after that. Like you said, you got to check out the price action and that level.
Yeah.
Like even on the volume profile, just on this range, you can see it clear as day. How, like, if you ever study the volume profile, anything that looks like this, where it's just a nice sort of step up and then step down, and it's like the center is the heavy part, it's a range, right? So we're definitely still in that range. There's no sign that we're going to break out of it anytime soon until it actually, like Jannie said and Michael said, until something happens, right? If like my life depended on it, right, and I had to give a longer term direction, I would still be bullish on it, right? Simply just based on, because of that area here, how we broke through it, come back, and then a potential continuation. But that's not like guaranteed. Do you see what I mean? That's just from my experience, the probability is a little bit more in the favor of the buyers long term. But anything can change. But from what I saw today, like, there's no clear sign yet. Anything can happen. I would wait. Like, I would never trade in the center of the range. If we get to these highs again and you see clear, whether with candlestick patterns or whatever it might be, however you identify things, right? Like I use volume, but if other people use something else, if it gets to the top here and you see a clear sign that maybe you want to short the market, then treat it like a range, right? You want to be buying near the bottom, selling near the top until one of them breaks, and then or see a false breakout, and then like a stop hunt, and then a reversal to the other side. I mean, that would be my overall take on it.
Yeah, I agree with you. Sorry, who was? I think you were still busy with something else, Sam.
I think I showed the S&P. I'll just show the recording real quick. Really wasn't that great today. There was nothing too special. But we got into, as I explained earlier, I waited for that. You can just about probably see it on the candlestick chart at the bottom. I'll wait for it to go all the way up, have a bit more buying momentum come in. And then when it came back for a retracement, which is basically this part here, I'm now looking for sellers getting trapped, right? And I started seeing it, 500 contracts, bit bigger numbers coming through, sellers getting trapped. And then I'm looking for a bit of buy pressure coming in. Pretty standard setup. We started seeing a bit of buy pressure coming in again. So I was happy to start entering, drip feeding some positions in. So I started entering. I did get a really nasty, like, I wouldn't call it slippage, but I think it was just the computer lagging. Like I clicked buy and it's just loading for like, when did I actually click it? I think it took like 10 seconds to actually get in.
Oh no, I hate that.
Sam, I told you need to get away from MS-DOS. How many times do I have to tell you?
MS-DOS? I'm still using a I'm using a Super Nintendo to train on. The NES I'm using. But,
anyway, yeah. Sorry, carry on.
No. I mean, that was pretty much it. Had my target. So my target was obviously this area here where there was a gap in volume, and it also, I mean, there were two potential targets, right? You got that high and that high. They're both within that area. One of them might be it. So I put it at the first one, and then for some reason I decided, actually, let me try target a higher one, but I got out before we hit the higher ones. So bit of consolidation. I'm starting to see that buy pressure come in. I'm getting a bit more happy now. We're seeing these, bigger numbers. I keep switching the time frame in my recording, so it's a bit annoying. But maybe I'll show it again. I'll just forward a bit. Forward a bit more. We're still kind of consolidating as buyers coming in, but we saw some heavy buying coming in basically near my entry, which just gave me that little bit more confidence to hold it. It was trying to play around a bit, kind of came back a little bit, and I was at this point I was like, what the hell is it doing? And I really didn't like the fact that we printed like quite big sell numbers coming in, but the amount of buy pressure that was in the market at this point, I thought, nah, like we're so close to that kind of area, and they kind of work like magnets. Do you know what I mean? They kind of attract price as well. So I just held through it. Didn't get too nervous. Kind of held through it. Everything was looking quite decent. It was just trying to, and I could see that buyers were always stepping in around this area. They were kind of defending that area. At this point, I already put my stop loss a bit higher up. Before it was below this area here, bumped it up a bit. After those heavy buyers came in, I was pretty happy to have a stop a bit higher. And then eventually, after I think this whole thing took about 20 minutes to play out, the moment we broke those sellers, I was quite happy then. And then I knew we're going to at least get to here. But anywhere within that yellow box area, I mean, we could stop and reverse. So I kind of just watched. I was a bit on the higher end, kind of watched it a bit. I kept kind of rejecting near it, and I was like, all right, give it a few more minutes. And it just started going sideways for a bit. And then the moment it got close to the last high it made, I just got out pretty much. It did hit my take profit in the end, but I was so close to it anyway.
It sounds like my... Sorry to interrupt. No, it was like, it sounds like I placed a trade yesterday in the bell open first session, and it was like, and then it started to move, and it just missed my take profit, and it reversed. Like, oh man,
yeah,
that was the first trade I played, but they do happen. But anyway,
that's the thing. I mean, what I was worried about since it started moving sideways. When I was treating it like a range, this whole area started treating like a range. I know eventually one side's going to win, right? It's either going to break down to the downside or break up and hit my take profit. But if I'm at the top of the range now and I'm starting to see sellers again coming in, there's a good likelihood that we're just going to go back down to here before it goes back up again. And do you know what I mean? And if it breaks and down on the downside, then oh crap, now I'm gonna get out at, you know, break even or something. What's the point, right? Might as well just get out at the top of the range, secure that money, and it doesn't always work out because, like I said, it did eventually. That was it, but it did eventually. Where is the actual chart? You might be able to see it. Is this S&P? This isn't S&P. This is pound. It did go a little bit higher, but actually I got out a pretty good, I'll say a pretty good area, considering. If I just drop to the 15-minute, make that a little bit bigger, wait for my drawings to load up. So that was that box area you saw. I got out at the bottom of it. It did go up a little bit more, but then, yeah, it did eventually reject it after a false breakout. So I think I got out a pretty good area considering I was not expecting that. That surprised me. I look at the charts again later and I'm like, what the hell? Why did I like I expect a retracement, right? And I could see that kind of retracement, but then it bounced off that area, another gap in volume, bounced off the one that it blew through before, and then blew through that, gone back to this gap in volume, and now it's just kind of ranging between these two.
Yeah,
it has no idea what it wants to do.
It's close to the. Remember, I think we spoke about this. It's close to the 200 EMA on the daily, right? So you're gonna get that. Yesterday we had a strong sell-off, but you're gonna. This is the typical behavior at when you're at the 200 level on the daily. It's like no, it's like the behavior is just all, you know,
like that magnet, like you were saying. Like it's either bouncing off of it or it's attracting it to it. It's like a little bit of sporadicness there for sure.
Yeah, absolutely. But I mean,
Sam, I got a question. Do you ever like say in a scenario like that, do you ever just like move your stop up like continuously, maybe like trail it and just kind of see if it'll just continue to go?
Honestly, I never do. I'm not sure why. It's not because I'm against the idea of it. I just never do. Like, I think it's the levels of stress you feel when you're in a trade, right?
Yeah.
And I'm not saying that I'm like highly stressed all the time, but it's like I'm constantly looking at the numbers. Like if I'm in a trade, I'm just staring at the screen like this. Do you know what I mean?
Yeah.
So 20 minutes of kind of looking at raw numbers just changing constantly, and you're just trying to find any clue. I'm just happy to get out. Do you know what I mean? Half the time, I'm just happy to get out. Like
that's true. Like it's true. Like, but when you scalp, I never add positions to my size, but you do like when you're done with a scalping session, you do kind of, especially when you're in trades. Like after that, like you do have like some severe, decision fatigue,
anxiety. It's like anxiety or something. It just comes over you, right? Like for some reason, it's
very draining. It's draining. It's quite draining. The concentration and this obviously
it takes so much focus.
Yeah, because the way I'm like looking at it, I'm usually got like I'm looking at the numbers, and then I got the depth of market here, and I'm like constantly comparing the two, right? I'm constantly looking at like, are there any big limit orders? And I'm looking at like absorption, like are these numbers continuously going up, or are they starting to drop, go up, drop? So I'm looking at then when I see it change, like I just saw it change to negative, right? To the sell side. I'm looking at like, why did that change to the sell side? How many buyers did they just clear off the what do you call it? The order book? And like, if I'm seeing like, like huge numbers or bigger numbers, like 100, 200, right? And they just get wiped out like that. That's not a good sign if I'm buying at the moment, right? Because the buyers are just not able to, like the sellers are just able to like plow through, right? So I'm constantly like looking for those tiny clues that give me an indication whether is it actually going to hold that area, or is it so it's like really just like it hurts your brain after a while. Do you know what I mean? You can do like 20
take the money and run. Just take the money and run.
Yeah, that's literally it. So I'm just happy to get out half the time.
I can imagine all those numbers constantly changing. Okay, what are they doing? The buyers are coming in. No, it's no, they're getting back in. That's a you must be really tired after a session like that, constantly following those numbers. And
like, you couldn't do it for a whole day. Like trying to do that for a whole day, you'd have a migraine by the end of it. Like
and a blown account. Definitely. Like you typically, like I think if you start your session wrong with like a mistake or a bad kind of, you're just like not on form. I mean, it's difficult to have a good session after a bad start. If you just like from the beginning, you're making mistakes. You really need to be fresh and ready for it. So
yeah,
that's my experience anyway.
This is the thing, like there's really one move you want to catch on the S&P, and I'm assuming the NASDAQ is similar, right? There's usually one or two moves a day after the US Open, obviously. It's the initial move right after the Open. And then sometimes there's a move, a couple hours later, there'll be another move, right? That you could potentially catch. Now, you don't want to catch the second one because it will just, like, you feel like you have, I don't know. The first one is just a little bit more clearer and a little bit, in my experience. I'm specifically talking about making a mistake, just bad trading. Like, why did I do that? But you're right. Like the first couple of opportunities is typically best. Like, well, for me personally, 15 minutes after the Open, that's when I start to look for opportunities, because the first 15 minutes can very easily trick you into a direction. Yeah, absolutely.
Really strong push to the upside, then whoop, it just drops into the opposite direction.
Yeah, I mean, we had that today, right? We had
we had that the whole session today, but I'm talking specifically about the we had that today at the Open as well, I think.
Yeah, that's what I mean. Like, this is the Open.
Yeah,
right?
And the next one just completely.
Now that's why without the volume profile, I would be kind of screwed, right? Because the volume profile, I knew that I don't really want to be buying until we kind of close that gap, right? So this whole area here. So when we opened and we pushed down, although there was a lot of volume coming in, I can wait until we get to this area and then make my decision. Now, I didn't actually buy here because of that volume, right? It did spook me. I don't want to be buying into so much sellers, right? But then you can kind of start seeing them dropping off, like buying volume came in. And then once we started seeing a bit heavier volume come in, that's when I was like, all right, now I'm happy that these sellers are out the market. No one's trying to sell this right now. Do you know what I mean? These people are not going to try and defend it. They have long gone now. They've left. So that now gives me that buying opportunity. But I was already quite high up at this point. I didn't want to buy here. I wanted to see a bit of a pullback before I could buy. So I waited. We got the pullback, and then I entered here, which happens to be the exact place where if I just bought back then, it would have been the same price level. But generally speaking, you don't want to buy like near the top, right?
Yeah. Do you switch between accounts? So say for example, if you place a trade, I do that sometimes. I do that a lot actually. Because there are two different, not the sessions we have on here, but there's like the first, say the first 2 hours of the New York Open. And then after that, you can still get opportunities, but you kind of trade it on different accounts. I'm not sure if you do that. I like to rotate between accounts.
No,
I don't know.
No. Yeah, I've never done that. But yeah, I'll be honest, I've never done that.
I do that. No, I know, like especially prop traders who they get like,
I know what you mean.
So Monday they trade this account, Tuesday they trade something else, Wednesday
because they need to, because some of the prop firm accounts, they need you to have like a minimum trading days. So they try to make sure they touch all the accounts, and then sometimes they might have drawdown on like another account, so they kind of want to stay away from that one. So yeah, they do kind of bounce around from different accounts. But yeah, I don't do that either.
I mean,
do
like,
you jump on your? What about your? Say you got your trade for the day, and then you go on and you trade like a demo. Do you do that or not?
No. So what I do is, I will admit, so I have a trade copier. I got about 13 accounts connected. I got like 10 prop firm accounts, right? So like that's another reason I'm like so samurai sharp with my entries, because if I'm putting on 1%, it's over $1 million in prop capital. That's 10K that I'm down, right? So like I have to be very, very, very strategic with my entries and my exits, of course, also. But because if I take account on one, I lost it on all the accounts for the day, right? So
yeah, but that's what I'm saying.
Mm-hmm.
That's what I'm saying. Is like if you do that, if you have a bad day, it was just on one account. That's what I'm, that's what I'm saying. If you had a bad day, you had it on one account, and the others.
But then if you have a good day,
now what I used to do is I did have what I would call like
it's like
account, right? Like, but so the leverage is much higher, right? So on net account, which is still connected to my accounts, all the accounts are on 1%, and then this bully account is on 10%, right? So when I lose trades on that one, it's 10 times as much as the other accounts are. But when I win, obviously it's 10 times as much as the other ones too.
We shouldn't admit to it, but I do have. I think you call it a bully account. I just call it like a high risk account where.
Yeah, same thing. High risk bully.
I call it the. I call it the casino account. It's the casino account,
there you go,
guys.
Casino account. Okay,
that's what it is.
Yeah,
that's what it is.
Like, yeah, absolutely. I mean, we shouldn't admit to that and say that that's like absolutely not. But if you only have like a fair account,
Yeah, it's still that degenerate that lives deep down inside you that you got to scratch.
Yeah, try to suppress the human inside of you. I know.
Yes. I'm still a monster. Don't ever forget.
That is exactly it.
You guys ever see that? It's like it was this meme that was going around for quite some time. It was the Kermit the Frog, and it was like the good side said, "Oh, just take your stop, take your profits here," and then the bad says, "No, take the 5x."
Yeah. Well, that's not. That's actually not a bad idea if you have like on a CFD account, because you can obviously copy accounts. There are so many copiers.
Mm-hmm.
You have 3 different accounts. So you have like a really low risk account, and then a medium risk, or maybe not even medium, but slightly higher than medium, or lower than medium. And then you've got your casino account that you link to it. And then if you have but then you just
I will admit though, one thing that I will say that I don't ever want anyone to confuse is I don't have an account where I'm just taking stupid trades. That is not a thing. All the trades that I do take, they are one of my 5 setups. It has met all the criteria. The only difference is this one is much higher leverage. So this is still a pristine setup, right? It's just that this one is much more higher leverage than the other accounts are.
I use it like more, like you said, is to for that degenerate that lives in all trades. Right? That's why that guy. But also, I call it like it's like the emotionless account, right?
Mm-hmm.
Like if I blow that account, I truly don't care. Like,
yes, exactly. That's it. That's the key. That's the key. Yeah. That's very different to an account that you take small risk, the boring one. The boring one where you kind of just kind of grow.
Account. Right. Yeah.
Right.
Yeah. Or the wealth builder. Wealth builder is low risk, slow growth, but then but just to make sure that trading doesn't turn into golf, you want to have like something.
Yeah. And I can't lie, like my bully account is primarily my withdrawal account too, right? Like I'm doing something on the weekend. I'm having some fun with it. I didn't crush it. I'm pulling out something from this one. And that's the one that gets replenished the fastest, right? Because the leverage is the highest.
Oh man, there was a time when
you guys got to remember here in Mexico, a few, $400 or $500 on the weekend, that goes a long way. Like you can really ball out for like on the weekend for almost nothing. right? Like
But,
you can do whatever you need to do almost.
But the important thing that you said there, Michael, is like you still take high probability setup. You still stick to your strategy.
Yeah.
You still do everything right.
Mm-hmm.
And then the money you take big risks on is typically a small amount. You're not risking ridiculous amounts because Sam, like you said, you should be willing to say, okay, if I lose it, it's fine. But if I make it, it's gonna be a nice day. Casino
it's
account.
Nice weekend.
Absolutely.
Yeah.
And it's not like, again, it's 10%, right? Which is still pretty high, but I'm not trying to flip the account where I'm putting 100% risk on every trade or anything like that.
I mean, many years ago, this is especially around the beginning, I'll deposit money, and it was typically at the time, what was the minimum deposit? I think it was $200, I think, if I'm not mistaken. I think it was like that.
I can see that.
And then first trade, then not long after, I get an email margin call, and you see that at the bottom, like the whole it's like red. I'm like, oh, that's not good. Like, oh man, and then they just kind of liquidate you the position for you, and there's like $6 left, and like, hey man, there was still $6. Why did you stop me? Go to zero. Yeah,
man.
But you do
I remember
that
the old me. I'd be like, man, that was so fun.
Yeah, it kind of sucks when you have to like keep taking out your card. Like, oh man, this is not good. What am I doing here? I don't know what I'm doing.
Like, I feel like I'm at the casino all over again.
Yeah, no, but the skill itself, oh man, it takes such a long time. And then if you try to make money, if your focus is just on trying to make money, and you don't appreciate the skill that it takes and how long it takes to develop that skill, you are just going to just mess up your life potentially.
The circle of death.
It takes so long. So, but once you like put that on the side and you just focus on the skill, it's like, okay, I'm going to trade so small, it doesn't really make any difference. And let me do this properly now. Yeah.
Because I try to justify it, right, by saying at least this was a pristine setup, right? Like, this was a great setup. I wasn't just closing my eyes and clicking the mouse. This is a trade that I would take on any of my accounts. The only difference is it's much higher leverage, literally. That's the only difference.
Yeah.
Okay, so Andre. Oh, we've got Andre still. Yeah, he wants to look at the dollar index. Okay, glad you asked the question.
Do you guys want to take over that? Because
I still
can't really see the volume in that, so I'll be useless when it comes to the dollar index.
No, I mean the dollar index. I'll show you. Maybe Michael, you can also. Because I think, Andre, you've already seen my analysis on the dollar index, which obviously it's now been a couple of days later. It's still, obviously, this is the weekly time frame, so just one candle a week. But yeah, this is the 61.8. We had that inside candle engulfing. I'm still bullish on the dollar index. Still bullish on it. That's the weekly. On the daily, I think this may look different now. That could potentially be like maybe some sort of engulfing candle. I don't know. Well, pretty close. Not quite. It pulled back into that the previous day's range. So not very clear there. I think the weekly is probably more clear than the other time frames for now. Anyway, let's have a look at the 4 hour. Yeah, well, the 4 hours in a range. The 4 hours in a range. So it's finding support here. It's at that. You see that level there. 1, 2, 3, 4, 5 points here. So it's in a range. It's definitely finding support there. So I do think it's got potential to move slightly higher. But we're in a range. So so really in the short term, I'm like, I don't have any real bias, but on the weekly, definitely, I would say it definitely looks more bullish in the longer term. Oh,
agreed.
Shut up. No, I will not buy your things. I think, Michael, you said like you don't take a trader seriously that doesn't use TradingView. You were talking directly to me, man. You hurt my feelings. Yeah. So
I don't think this guy knows what he's doing all the way. That's it.
No,
Yeah, I gotta agree with Michael on that one. I mean,
yeah, for 21 years, I've just been spinning my wheels, man. I know
wave.
nothing. I know nothing. Michael, what's your take on this? Like, if you just had to look at this 4-hour chart, I don't know, based on your way of trading, I think this is a bit easier to see. Your chart it's got a lot of jewelry on, man. Like even more than Sam's.
So for yours looking at right now it's no real bias for me just yet because it is kind of in this range. It's not really long or short, but if I had to force to pick a bias, it is long. Right, we broke that last little area up there. We had a nice little double.
Yes,
we broke that area. I would love to see that retest the area again and then go long. Yeah. But for right now, it's kind of just sitting there.
Yeah.
Yeah, I think we're in a range here. So, I think the pound US dollar, the news coming out tomorrow. We got the retail sales. I'm not sure what's that going to do, but then you also got the core PCE, and that's it for the week. So, I mean, at this point, yeah, but I don't know if that answers your question, Andre. But in the short term, I'm pretty neutral. I think we're just ranging. Yeah.
Yep.
See some of these comments.
Definitely need that to come back down to that support area. Look like it tried to touch it. That's not really enough for me. I need to see it really touch it. Like really touch that area. And
I'm the same. I'm the same because like I actually prefer when it goes slightly below and then push it. Those are
this right here is
a
fake. It's like, oh, everyone's saying, oh, it's just a wick, it's going long. They jump in long and then it does what you thought it was going to do in the first place.
Yeah, that's how I feel a little bit about the pound US dollar. This one that just missed it. So Andre, you could be like spot on, man. You could potentially be spot on. Maybe it does come as like, you guys, and then just drop and give us a proper little kiss and then go back up.
Right.
But yeah, I don't know. It looks pretty strong for me.
Yeah. Hard one.
Yeah.
Oh, you're laughing.
That's what she said.
Yeah, I heard it afterwards. I was like,
oh man, do you? What else are you looking at?
Brain of a 12-year-old. So.
That is true. That is true. But Michael, I think you have. Don't you have another pair to show us? I'll stop my screen.
Yeah, only one I kind of had that was kind of close outside of GU was. And I would never really look at this pair this much, but it was kind of close, right, to a setup today, which is AU. I don't really like AU too much because it's kind of slow, right? Like you might be in this pair all day. Oh, yeah, let's do this one really quick. So, yeah, kind of like what we were just mentioning. Once again, when I see this 5,200 cross, I know I'm in level 2. So in level 2s, I'm looking for some type of real W structures off this 200 and then go long, right? Once that happens, then I'll be interested in a move that kind of looks like this, right? Maybe a close above that 50 and at 13, my stop would go below the swing point, and then I would target this here. Nice 2 for 1, right? Almost 2.5 for 1. So I'll be looking for more moves like this on a dollar index. But right now, it's nothing. Just like GU, it's kind of between its 800 and its 200. It's just kind of in here. And there's no real move just yet.
Didn't the GU have like a big update today? I'm pretty sure, or earlier in the day. No?
GU had news. I want to say GBP had news super early today. I forget what it was.
Oh, but today it's
GBP had news.
it's breaking out of a channel. The pound.
It was at 8:30.
On the daily.
Oh no, we had USD news was at 8:30. The unemployment claims.
Someone asked a question yesterday about the pound yen, and I don't look at the pound yen. Like, and I opened up the pound yen. I didn't know where the hell I was. Like, oh well. You have to like you kind of have to. It definitely broke out of a channel there, on the daily time frame. If you just draw that.
Yeah, it did. See for me, this is it just now kind of went above, right? Like when I see this, this two crossed to the downside, but then we had right after that with this big move to the upside, these EMAs are crossing now, right? So I wouldn't be interested in this at all until it did a move like this and then run up. And I'll be interested in the move here.
Yeah.
Right. But this is the daily chart. I would not take the move like that on the daily. I would just be looking at it.
No, but it's a good place to get your bias from, isn't it?
For sure. So let's check out
with,
AU really quick. Was it AU? I think it was AU. Yep. So this was AU, right? So this move was super interesting. I always love to put these up here because when I'm with my group in the morning, I show them. I'm like, look, this has no 4-hour confirmation. So you know what that means? You can't take this trade. And I'll leave these here for tomorrow to show, hey, this didn't work out. And guess why? Because it didn't have any 4-hour confirmation, right? So I'm going to leave this here just for them for tomorrow. But to mark it up really quick, same thing as I always say. As soon as you have this 5,200 cross, I'm looking for M's or W's off the 200. Right now, in this case, this is super ugly because this is like a 3-headed M type of deal. We got 1, 2, 3, and then go short. Right. So you would be looking for something like that, if anything. But right when this was supposed to set up today, right when this was supposed to set up, right at 9 o'clock this morning, on the 4-hour chart, there was no confirmation. So this happened at...
It's a perfect M, that is. It's almost enticing you. It's like Michael.
M&M's. Yeah.
Yeah, right. Yeah, right.
Mike, I was gonna. Do you sign your name in candlesticks?
Right.
Yeah, that'd be great. That's sorry.
That would be super cool, right? That should be my new signature in candlesticks. Like, what do you do for
that would
trade
work.
Currencies?
Yeah. I would like to quickly show you. This is the analysis of. This is Igor's work, by the way. So credit to him.
Hold on 1 second. I'll give you this. So if you can see this.
Sorry, man.
Vertical line really quick here. You see this is above, right? So when I say I don't have any 4-hour confirmation, I would need price to be below all of this. And on this red candle, you see it's above. For me, that's why this trade is not going to work out. Now, had this been down and it closed below all of this on the 9 o'clock candle, then I would have entered this trade, and so would everybody else. But this is a pass. And I always leave these up here for everybody to show them the next day. Like, remember that trade from yesterday? You see it didn't work out? This is why you got to stick to the rules. No 4-hour confirmation for me is no trade.
Yeah.
Yeah.
Got to stick to the rules.
Yeah, my bad. I just want to finish that.
No,
Of course.
Yes. So yeah, let me just show you this. This is a trade that or a market that Igor is following, and I'll just share that with you guys. It's the dollar yen. So this he just identified this channel. Obviously, I'll just go with the channel for now because he showed the breakout. And then this is also a typical retest. And now you can see we're breaking up to the upside.
Mm-hmm.
So what did I? But yeah, I mean, there's a 2-sentence kind of explanation of the sticker. So yeah, this is the pound yen that I was. This is an indicator that just draws the channels for you. I don't particularly like it, but in this particular case, it does identify. This is why I'm saying it's breaking out of a channel. Maybe not quite. Yes, it is. But look at the size of the candle. It's pretty strong. Now, the next day can just wipe it out. We all know how it works, but I think it's a pretty strong move to the upside. So, but how would you trade that? Would you wait for at least another candle and then, or what? How would you approach it now that you see it's broken the channel?
Yeah, that's actually a little bit difficult.
Yeah, it's very difficult.
Because it's like a lot of them right there, right? It seems like it's several channels. I still can't tell. Yeah, this is too ambiguous for me. I don't know. I will leave this alone for now.
Yeah, I think this is a bit of an easier one because it didn't just peek its head out of the line. It was a very obvious clean break.
Yeah.
So that kind
of maybe though, like if you look to the left, you can still kind of see that resistance area. Like for me, that looked like they can still drop. So I think I would want to see it go up further, break that area there, and then retest that area again.
Oh, the pound yen, right?
Yeah.
Oh, you mean this resistance area? Yeah. Like let's say there.
That's yeah. So go back to the last chart you were just on. I'm not sure what time frame it was.
No, I was just on the daily on the pound yen. This is the dollar yen.
Yeah, this one. Oh, okay, yeah. So this one. If you look to the left, you see that resistance area there, like right to the left. Yep, go down a little bit.
There.
Down and to the left.
There. Has to be there. More left.
A little bit more to go. Right where that wick is to the bottom.
Left.
To the bottom.
Stop. Oh my God.
Yeah, right there.
Oh, I see. Okay.
Yeah. That looks like they can bounce right off of that still.
Oh, yeah.
Yeah. So I would want to see that break that area and then retest it to go long. I wouldn't want to take it right here.
Yeah, I think like what he did was like, because that is a retest, right? It retested right to the line. So he took it towards, I'm not sure. In the next session, I'll probably ask him. But yeah, I agreed. Like right now, it's probably a little bit too late. I don't know.
Yeah, because your stop would have to be far away, and then
yes, that's the problem. That's the problem when you get these. It's the same with the pound. You're kind of forced to go to smaller time frames and trade little breakouts, you know. But yeah, anyway, what's the pound US dollar doing now? Nothing. It will not do anything right now. I don't know if like Robert. Oh, you have a sacrifice account and it's your casino account. Yeah, man.
Hey, and Robert. Robert's my favorite guy.
You got an I386.
It's funny. Everyone has a different name for it, right? High leverage account, casino account, bully account. Robert calls it his sacrifice account, right?
It's a sacrifice account. Yeah. Yeah. Do you know what is like interesting? I don't know if Andre is still watching, but he's probably. It would be interesting to, you know. I mean, I wish he had like a. You know, like we could just like pull people onto the show, you know?
Yeah.
It's like
they can raise their hands, then we can unmute their mic and they can talk or something.
But do you see this? This is just something I just spotted, by the way. This, you see, it's also hitting a resistance level there.
Yeah.
But anyway. Yeah, the point is there's no real trade at the moment. The best levels, what do you think about this? Like the real key levels, like with multiple touches or like just really obvious support, horizontal lines that you can draw. static support resistance they still the king. That's the king. Those are just the best levels. Like this level here as well.
Right.
Let me just show you. You see, yeah, there. You know, but the problem with them is many of these beautiful trades is so obvious in hindsight, right? They're so obvious in hindsight, but as they unfold in front of you, it's not that obvious.
That's true.
You just, it's always
true.
Yeah, it's obvious after the fact. Andre says yesterday when Trump announced the import vehicle tariff, the DXY melted. Next week will be very important. Yeah, you're talking about that thing that he's going to sign on Tuesday, I think. He's going to sign something on Tuesday. Yeah, I mean, unless it's unknown what he's going to sign, but I think that's already been priced into the market. That the DXY that melted was the result of that news. That is the impact it had. Is that your alarm, Michael? Are you drilling hole? What's going? You've got a burglar in the house.
I think these guys over here, they're doing something. I can't tell what they're doing.
You just rented them. You just hired them. Yeah.
Like, dude, I don't know what they're doing. I think there's some people moving in like 2 doors down or something, but I'm wondering what they're doing right here.
Yeah. Oh, well. But anyway, so just to get back to that Trump announcement, yeah, I think this is the thing. Like when the announcement comes, the market will react to the news and not, do you understand? And not actually when it's going to get signed, because the news is already out. People know it's going to happen. The reaction will be on the news. I don't know about the sign thing, unless he goes like he takes his pen and he wants to sign. He goes, and then the market goes, I'm just joking. And then finally signs. Then potentially, but I think otherwise.
I just did that offer for all my buddies, so everybody else can jump in.
Yeah, so that's it. I don't really look at anything. Oh, I was going to look at the at gold.
New high again, didn't it?
Yeah.
Yeah, this is crazy.
Yeah, this thing's a monster, hitting all-time highs like every week, every month.
Yeah, I just
hard to trade though. When it's high up, you got nothing to base your decision on. Like,
well, no, right? No, there was. I'll show you exactly where a good entry was. I'll show you now. Yeah,
no, that's different. I mean, right now, as we're
right now, right now it's very difficult. I mean, this is the 4-hour time frame, strong rally, but you're now hitting a resistance, and now this is one of those areas. Like, I don't know, because you are extended. Yeah.
Funny enough, this was my trade of the week on Monday. I smashed this trade on Monday.
Really? Oh, this is the 4-hour.
Okay, the pull down there. I just
realized
you can't see what I'm pointing at. I'm like pointing on my screen. I'm like right there.
This thing definitely needs an annotate button on here. Like it definitely does. Like it's annoying that we can't.
Oh, did you? I'm not sure. Did you take a short?
Yep, a short off to the right. I can see it to the right. That next one, not that one. To the right.
That one.
Right there, baby. That's where I grabbed it. Yeah.
Oh, nice. Okay. Yeah.
You see the M top? That's the pullback, right? And then that area up the top is where the 50 would be. Close below that 13, short.
Yeah.
Yeah. I can actually see the pattern. The one you always draw. I can see it now.
Yep. See, once you see it, you can't unsee it.
You still need to get T-shirts printed with that pattern.
I know, I will.
This is
a much funner session than I feel like we normally have. A lot of laughs in this session.
All right, so Andre, you're saying you think 1.28 and 1.285. Yeah, look, you could be right. I would not count that out. I've learned a long time ago the market doesn't give a damn what I think is going to happen next. But I just believe in like following what's busy unfolding. Now I've mentioned like the those retracement levels. It can just crash through them. If they won't necessarily hold there, they're not necessarily. They just levels you identify for potential turning points. They can just crash straight through them, and you could be right back here, and it could go lower. Yeah, you could be absolutely right. So we'll see how it unfolds. But for now, I think we're back in the middle of this range, and we're probably going to get a pullback now. That's what's likely to happen next. But anyway, guys, it's always great to see you, Michael and Sam.
It
was a very good session, guys. Very good session.
Yeah. Have a great day, and I'm sure we'll see each other again soon.
You too. And to all the viewers as well, thank you.
Yeah,
Robert,
thanks, Andre, Robert, and the others. Thanks for watching. Have a good day.
Take care.
Cheers, guys. Bye-bye.